Yeah, guys, good afternoon to everyone. Uh, is my voice is audible to you guys?
Yes, sir, it is audible.
Okay. So I'll wait for a couple of minutes because I have only half of the participants here. The other half is yet to join. I'll just wait for a couple of minutes and then we'll start off. Okay. So guys, as I discussed in the last class also, this session is purely you need to come up with the questions and I need to answer those questions, seek clarifications, doubts. That's how it goes on. So that means what all doubts you have, howsoever silly that doubt may be, you should get it clarified here. That is what I will. I have already given you the question bank. Yes, we will discuss the same question bank, and then you need to come up with the set of questions or set of doubts that you have, conceptual clarity and all that. Then I'll give you the conceptual clarification and doubts clarification. We'll do it as a part of this session. So we cannot redo everything here because it's not possible. We have seen that we have taken so many sessions to complete this level 1 module. Now you are getting into a crucial module of evaluation. So it's a level 1 mock, and you need to clear that level 1 mock as part of your grade book. So it's a milestone that you have to reach, yes, as a part of your curriculum and all that. Yes. So let's hope that all of you will come up with a lot of doubts and clarifications. That is what I want. So we'll wait for 2 minutes and then we'll start off. Yeah, guys, all of you are able to see my screen. Hello?
Yes, sir.
Yes. Very good. Okay. So there are top 10 questions. Not top 10, the first 10 questions. Please have a look at it. Okay. Please glance through every question by question. I'll give you 5 minutes time for you, rather 3 minutes time for you to go through each question. And definitely you'll get some doubts, some clarification. Yes. Then you ask me, I will clarify it. Yes. That's how we are going to do it. And I'm going to ask each question to each one of you. not each one of you, any one of you, or any one of you can answer that. That talks about your preparation, that talks about your involvement, that talks about your active listening, active participation. So you need to come up with a answer for each of the questions, yes. And then I will give my answer so that you know how to answer it in a real-time interview processes and mock interview process. Yes. Yeah. Hmm. Okay. So just have a look at it, top 10 questions, and then I will take you to the these questions as a part of this. Guys, all of you are able to see my screen?
Yes, sir.
Yeah. Okay. So try to answer yourself as in your own thinking process. Try to answer these things so that you will understand that. Then you may stuck up somewhere. That is the area that you need to focus, and that's the area that you need to seek clarification or doubts. Yes, that's what you have to do. Yes, try to answer them. Yes, so that you know where you are lacking and all of this. Yeah. Guys, you can ask me any question out of these 10 questions if you have any clarifications. Anyone?
Sir, fifth question, sir. Custodian bank and its roles.
Very good question, Vamshi. So, custodian bank is a specialized financial institution, is which safeguards, which safe custody of what? Client assets, investor client assets. Who are investor clients? Like institutional investors, like HNIs, like family offices, like corporate clients. They hold the financial assets like cash and securities. So, who will safeguard these cash and securities? Custodian banks will safeguard these cash and securities. So, where these institutional investors keep their money? With their custodian banks. And where they keep their securities? With their custodian banks. So, custodian banks is a specialized financial institution which requires specialized license to offer custody services to their clients. Is it clear? Hello?
Yes, sir.
Most of the investment banks, they also offer custodian services, but that's a separate license. Custodian business is separate, investment banking business is separate. So most of the investment banks, they offer custodian services to their clients. Yes. So who are the clients?
Institutional investors like that.
High net worth individuals, corporate clients, family offices. Mainly these types of clients, they need this custodian services. Clear?
Okay, sir.
Ordinary individuals like you and me cannot open a custodian bank. Yes. Why we can't open custodian bank account, guys?
Because of high charges, sir.
Because in custodian bank, huge funds are involved.
Uh, Their charges are very heavy. Yes, you can't afford their charges when your amount of investment and holdings are very less. So it's not viable for the ordinary investors. So it's not for the ordinary investors. For high net worth, ultra high net worth individuals, institutions, corporates, family offices, they can afford. Is that clear, Vamshi?
Yes, sir. Thank you.
Okay. Next, guys. Was anyone can ask me any questions?
Sir,
Sir,
eighth question. What is a dealer, market maker, and its role?
Very good. Very nice. So dealers means these are broker dealer firms. They are called STOs, securities trading organizations. One of the business of investment banks is securities business, investment services. We know that buy side business. In the buy side, what they offer broking services, they offer dealer services. So as part of dealer, what the dealer does, dealer basically does the activity of buying and selling on their own account. That means they themselves buy, they themselves sell the underlying assets. They give you two-way quotations, bid rate and ask rate. So I'm a dealer in, say, I'm a JP Morgan Chase. I deal in IBM securities. I buy IBM shares, I sell IBM shares. What I'm doing, I'm dealing. That means somebody who wants to sell IBM shares, they will come and ask me the quote. They have to match my sell quote, that ask quote. Yes. Somebody wants to sell IBM shares, they will come to me. Then they have to match my bid quote because that's my bid rate. That's my buying rate. So I will do this dealer business. Dealer means who's ready to buy, who's ready to sell the underlying assets in two different prices, bid rate and ask rate. They are called market makers. They are making the market. Yes, that's what the dealers. So JP Morgan Chase may be dealing in multiple variety of securities, shares, bonds, money market instruments, derivatives. Is it clear? Hello, Anas Khan.
yes, sir.
Understood what is a dealer? Dealer does the dealing. Dealing means they're ready to buy, they're ready to sell. Yes. Is it clear? They
Yes,
do
sir.
two ways. So they become counterparty in the trade. Yes. Whereas brokers do not become counterparties. Brokers only facilitate the trade and then they get that deal from the market. Yes. They route that trade to the market and they get it match in the market. Yes. But dealer gives two-way quotations. Yes. Is it clear?
Sir, how do this reduce volatility?
What it reduce volatility?
I mean, like their constant presence stabilizes price because they cushion sudden buying or selling pressure. How this
Yeah,
works?
see, imagine there is no market makers. Then the buyer sellers will not have the market quotation says. They don't know what prices are happening as. Then suddenly the deal may be happening between two clients at a different prices. The volatility may be high. If there are a lot of market makers, they give the prices as. They give bid rate and ask rate. So thereby, you know that the volatility still will be there. Don't say there won't be volatility. There will be volatility, but they bring the market making. Yes, that means there is a continuous pricing that happens in the markets. The market makers can change their codes. Don't say that codes remain same. If you call me at 10 o'clock, there is a one code. If you call me at 10:01, the code may differ. Is it clear? Hello.
Yes, 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 yes.
So see, presence of market makers will really definitely help the market. Yes, because it gives the prices for the investors to enter to exit. Yes, through the market makers. Is it clear? Hmm.
Yes, sir.
Okay. Any other questions, guys?
So this buy side and sell side functions.
Buy side and sell side functions. Very good. So investment banks, they have buy side, sell side business. Sell side, they help the corporate clients, governments, municipal corporations, SPVs in selling the securities. That's mean basically they help in selling the securities. That's the sell side business. And they also do the mergers and acquisitions. They also do the corporate restructuring services and corporate risk management solutions, and strategic advisory services. So it's a sell side business, all about the corporates governments, municipal corporations, and SPVs who want capital. Yes, they want to sell their securities and raise capital. Who will help them in selling securities? Investment banks.
Investment banks.
Investment banks, that's a sell side business. It's a business where they help in selling the securities by the issuers. Yes, clear, that's a sell side business. Buy side business, the clients are investor clients, those who have funds. So buy side business deal with the people who have funds. Sell side business deals with the people who need funds. Is it clear? You understood?
Yes, sir.
So the buy side firms means like pension funds, hedge funds, private equity funds, mutual funds, insurance companies, some banking companies, non-banking finance companies, sovereign wealth funds, endowment funds. What are these guys have? They have funds. Is it clear?
Yes, sir.
They have funds. What they want? They want returns. Yes, they want returns. Now, how they get returns? By taking investment service.
Investment
Investment services
service.
offered by
Investment
investment
bank.
bank. So investment bank offer investment services to these investor clients. Now in that investment services, what they offer? Broking services, dealer services, research services, portfolio advisory services, portfolio management services, post trade settlement services, clearing and settlement services. And they also offer securities financing services, securities borrowing and lending services. So they also offer risk management solutions, risk management services to these clients. Is it clear?
Yes, sir. Clear.
So investor clients require investment services. They also require custody services. For custody services, they go to custodian banks. For investment services, they go to investment banks. Most of the investment banks have got both investment services and custody services.
Custodian
Is it
services.
clear? But
Yes,
that's
sir.
a separate line of business. Custody business, separate line of business.
Yes, yes.
Yeah. Okay. Fine.
Thank you, sir.
Yeah. Guys, anyone else?
Sir, and one more thing, sir. When I'm going to search the topmost investment banks, so every time it is getting a different of list, sir. So how, what parameter can I make top 10 bank investment banks, sir?
This top 10 ranking keeps on changing. Yes, there's no standard way of it. Is, but most of the time, top bank will be Goldman Sachs, Morgan Stanley,
JP
Bank of
Morgan.
America, Merrill Lynch, JP Morgan Chase, Citi. This top five always be there. Yes, their rank keeps on changing. All these are American banks. Is it clear? All
Okay,
this top five is most of the time are American banks. Sometimes some other banks may take over the fifth position or something like that. But at least you should know top five, if not 10. In that 10, definitely HSBC will be there, and Barclays will be there, Deutsche Bank will be there, maybe PNB Paribas or Nomura, UBS. Yes, the other guys will come up. Is it clear?
okay,
Sir, I
sir.
have one question here.
Yeah, please.
Sir, does this Big Four also operate some investment banking operations there? I
Big
think I'm just guessing.
Big Four, Big Four is this consulting companies, yes, KPMG, EY, and PwC, and
Deloitte.
Deloitte. Yes, they're there. Yes, they're also there, but they are not like investment banks. They are more on the consulting side. So they give the consulting on accounting, auditing, tax matters, some corporate restructuring. They will also support them, but mostly investment banks are they deploy huge, high talented professionals will be with the investment banks because their
Okay, sir.
main business is investments only. Yes.
Yeah.
But whereas this consulting company, they do a whole lot of other things, right? Mainly their main business is accounting, auditing, tax matters, taxation, and some consulting. They will do that, yes. But here, their main business is investments only. So you will go to specialists, yes. They
Okay.
are specialists. Is it clear?
Yes, sir.
Hmm. Okay. Any other questions, guys? Okay. Hmm. Now, my first question to anyone can answer this. What is a financial system, its purpose, and its components? Anyone can answer. Please.
Sir, financial system is network and which helps in money flow between people who have it and people who need it.
Mhm. Okay.
and its purpose is to channelize savings into investments
Very
as
good.
people invest money, and
Mm.
it also helps in maintaining financial stability and promotes economic growth
Very
by
good.
supplying funds.
Very good.
And
Mm.
components,
Mm.
financial institutions like
Mm.
banks, insurance companies,
Mm.
and financial markets
Mm.
like money market, capital market, foreign exchange market, derivative market,
Very
and
good.
financial instruments, shares, bonds, debentures, etc.
Mm.
Financial services like banking, lending, investment services, advisory services,
Mm.
and financial regulators are RBI, SEBI.
Mm. Very good. Very nice. Anyone else, guys? Hello? Pause. The forum is open for everyone here. It is an opportunity for you to express yourself as. Yeah. Can anyone? The
Sir,
first question.
one point I will say that financial system is a bridge between the surplus entities and the
Mm.
deficit entities.
Very good. Mm. Okay. Guys, anyone else?
Sir, I
Hello?
would like to tell.
Please go ahead, Mark.
Sir, financial system is a network of market or instrument that facilitates the flow of fund between deficit entity and surplus entity. The main purpose is the flow of funds between in the market, and its main components are financial instruments, regulatory body, and products, financial products.
Mm. Very good. Okay. So good, guys. Good that all of you have covered many points here. So financial system is one of the important system in any country. If a country wants to grow, it has to have a robust financial system. You know why India could not grow till 1991, 1947 to 1991? We had only 2% growth GDP, 2 to 3%. This was not enough to make the country prospering and all that is. Why? One of the reason is financial system problems. We didn't have a proper financial system. So in 1991, they opened the economy. First thing that they attacked is the financial system. So Narsimham Committee 1, 2, 3. The Narsimham Committee has made a lot of recommendations, and that recommendations are already been adopted by the Financial Ministry and Government of India, and that unleashed the potentiality in India, and that's how the finance flow will make the economy grow. Yes, suppose say Anas Khan wants to start an enterprise. He need funds. Yes, he has got his own money. His business plan is 500 crores, but he may have his own money, say 200 crores, 300 crores. He need money. If there is no financial system, where from we start that 500 crores enterprise? Not possible at all. So if there is a good financial system that can support Muhammad Anas Khan to start the enterprise, then that itself grows the economy. Yes, the economy has to grow. So the economic growth depends on the financing abilities that the country can get. Yes, so finance is very important. Finance is like a lifeblood for a body. Imagine if you don't have blood, yeah, how much ever strong the body is, collapse. Yes, so that's how it is. If you have too much of flow of blood, also not correct. Yes, so you need to have a sufficient quantity only. If you have too much of thing, then it leads to acid bubbles. So it should not be good for the economy. So you need to control the economy with a good flow of money flow, yes, as a part of it. So what is the latest GDP growth, guys? Hello?
8.2, sir.
8.2%. This
8.2.
was not expected at all. Yes, we were growing at 6%. Now 8.2. Can it grow 10%? Yes, everything can possible. If it can grow 10%, then it will create a lot of economic growth in the economy. Yes, a lot of enterprises will start set up, and a lot of money will come, and a lot of employment opportunities will be there as a part of it. So growth will be very important for any country or anyone else for that matter. Yes. Okay, fine. Good. Guys, someone can take up this question? What are financial institutions and types of financial institutions? Yes?
Yes.
Yeah, Drishti. Please go ahead.
Uh, yes, sir. So financial institutions are organizations that handle money-related services like deposits, loan, investment, and insurance. And they include bank, NBFCs, mutual fund, insurance company, investment bank, pension fund, and sovereign wealth fund. Here we can also take the example like when a mutual fund collect money and invest it for clients, that's a financial institution at work.
Very good. Very nice. Anyone else, guys? Hello?
Yes, so
Accept deposits
financial
from
institution.
Hmm. Go ahead.
Yes, Komal, you can say.
Okay, thank you. So financial institution means any organization that deals with the money and financial services like accepting deposits, giving loans, managing investment. Simple, it act between people who have money and who need money. So there are some types of it like banking institution which accept deposit and provide loans like commercial bank, cooperative banks,
Hmm.
and non-banking financial companies also like provide financial services but not have any license.
Hmm.
For example, like Bajaj Finance, Tata Capital,
Hmm.
and some insurance companies also.
Hmm. Very good. Yeah. Anyone else, guys? I'll give one more.
Yes,
Yes.
sir. In
Yes.
financial institutions
Who is
that
this?
are
Who is
there,
this?
Monisha, sir.
Monica. Yes.
Monisha, sir.
Monisha. Yes. Yes, Monisha.
Thank you. There will be two type of financial institution. One is banking related institution, and the other one is non-banking companies. Like a banking company is just like accepting a deposit for the purpose of lending to the general public. Whereas non-banking financial institution is involved in the process of borrowing and lending. It involved in the service. It involved in the service provided to their clients like that.
Hmm.
And it has been divided into two, that is asset management companies and investment managing companies. In asset management company, it includes pension fund companies, uh, mutual fund companies, hedge fund companies like that. And
Hmm.
investment banking companies bring the two parties where one party is need of fund and another party is want to invest in some of the funds. So it brings both the parties together. It acts as an intermediate between two parties.
Very good. Very nice. So, guys, you understood what are financial institutions. These are finance organizations which provide financial services to the economy, persons in the economy. It could be individuals, it could be corporates, it could be any other party who needs that financial services. Now, the financial services could be banking services. For that banking services, we have banking companies. Insurance services, we have insurance companies, risk coverage products. And for other purposes like investments, rising capital, and all that to issue of securities, we have investment banks. And somebody wants to take the help of institutions to invest money in the financial markets, we have asset management companies. Somebody who wants to safeguard their money, safekeeping and keeping it safe with some institution, we have custodian banks. So like this, we have variety of financial institutions which are there in the financial markets who provide the financial services. We have credit rating agencies who provide the credit rating services. So like this, we have stock broking entities who provides broking services. So like this, we have various parties who are there in the financial system. Is so you need to understand that. Is very good. Uh, Guys, next question. What is an investment bank and its role and functions? What is the buy side, sell side functions? Can anyone please take it up?
Yes, sir.
Yes.
Yes, sir.
Sort of investment bank is a financial institution that helps companies, government, and big investors to raise money, buy or sell companies, issue shares, and trade financial securities.
Mm,
And its role is to
mm,
companies raising capital, it
mm,
trading and market making services, research service, assets and wealth management and risk management services. And its functions are for buy side are they sell financial products, advisory services, research services. They help others raise money and offer securities to the market. And
mm,
functions of sell side are underwriting, market making, research report for clients, and
Sell side is different, buy side is different. I just now explain, yes.
Yes, yes,
Research and all. Okay, research is there for both buy side, sell side. But broking and all that is for buy side, yes.
yes.
Mm.
For buy side is for investors who purchase services from this investment banks.
Good.
They buy securities for investment purpose.
Very nice. Anyone else, guys? Hello? Yes?
Yes, sir.
Yeah, Jasmine.
Yes, sir. So, investment bank help company in raising capital to merger and acquisition and provide research and trading services. Its main function will include handling IPO and FPO, doing underwriting, managing merger and acquisition deal. Then they also provide research report and doing sales and trading. Then the two main functions of investment bank, that is buy side and sell side, will include. Sell side will include investment bank and broker who sell research and services, and they generally need money. Then buy side will include mutual fund, hedge fund, insurance company who invest money, and they generally have the money for the investment purpose. And one example is during an IPO, the investment bank helped the company list while mutual fund buy the shares.
Very good. So, guys, anyone else? Please note, this is the very important question. It will come in every interview. Yes, they will definitely ask you this question: what is an investment bank? What is their role and functions? What are their buy side functions, sell side functions? Yes, it's a very important question. Anyone else? Yes,
Yeah.
yes, Mark.
Where an investment bank is a financial institution that provides specialized services like capital raising, merger and acquisition, risk management, and advisories to the corporations and government and other large entities. So the functions and role of it are like capital raisings, merger and acquisition, or advisory services. And for the sell side and buy side, these are the entities. Buy side is the entity that has surplus of the funds, and sell side is the one who is deficit of the funds. So for the buy side, investment bank help for the advisory and investment purposes like PMS services, and for sell side, investment bank helps for the capital raising to the corporation.
Very good. So, guys, you need to be thorough with this investment banking definition. Yes, it's a very important element because you have done investment banking course. So definitely the interviewer will ask you what is an investment bank. Yes, you can't say I don't know at that time. You have to know it. You have to make all the effort to know this investment banks. Yes, it's a very important. Yes, very important. So you should always focus on the both sell side and buy side business. Sell side they provide corporate financing services, and buy side they provide investment services. The investment services includes broking services, dealer services, research services, portfolio advisory services, portfolio management services, securities financing services, securities borrowing and lending services, post-trade settlement, clearing and settlement services, risk management services, all that third-party product distribution services. They do all that type of services that you can think of. Yes, that's what they do. The investment services. Yes, whereas in the sell side, they provide corporate financing services, right? Raising capital for corporates, governments, municipal corporations, SPVs, and doing mergers and acquisitions. That's the sell side businesses. And risk management service, risk management solutions, and strategic advisory services and consulting services to these, corporate clients. Yes, this is what they call it as. We clear, guys? Hello? Now, these top 10 investment banks, you can search online, you'll get it. You should know them in by fingertips. Yes, that's how it is. You can't say, I don't know investment banks. You should know them because that is your future. You should know what are the top investment banks are there. You should be knowing at least top 20, 30 investment banks that are there, and they are your clients. They are your future employees. So, boss, search top 50 banks, top 50 investment banks in India. Who has office in India? Where are their offices located? You do that research. Somebody can do that research and give me that data point. Yes, guys, the next class. Top 50 investment banks that are operating in India.
Yes, sir.
Which
Yes, sir.
cities they have,
Yes,
where are
sir.
their offices located, what is their website. Boss, if you do this, this is your future. This is where you are going to land. This is what you are looking for your future employment, yes. So, and please note, market is very bigger than Ematicus, I'm telling you. So Ematicus also will provide the opportunities, but there are a lot of opportunities in the market, yes. So Ematicus may have 50, 60 or 100 company tie-ups, but market is bigger than that, yes. So market is very large. So you need to keep searching for the opportunities, yes. Yeah. Okay. Next, guys, can anyone take up this question? What is a custodian bank? Its role and functions? Yes. Komal?
Yes, sir.
Hmm.
So, custodian bank is a financial institute that safeguards, protects financial assets, share bonds, mutual funds, then derivatives, foreign securities. They hold this asset on behalf of investors, mutual fund, pension fund, large institution, and they that ensure like they are safe, recorded, and managed properly. And the role is like maintain record of investors and holders.
Very good. Anyone else, guys? Hello? Boss, there are others are there who are simply spectators. The spectatorship will make you spectator remain. Yes, you need to go into the game and play the game. You have come here to play the game, not to look at who's playing what. Yes, boss, you are a player here, not a spectator. You have to come and start doing small bits. If you start, you will get confidence. You will get that flow. Nobody is born with everything. Yes, we have to make that effort. So you make mistake here. I'm fine with it. I'm absolutely fine if you make mistakes, because if you are making mistakes means you are learning. You are in the right direction. Yes. If you are making mistakes means you are in the right direction. You are learning, but don't repeat the mistakes. That's what you need to be here. Yes. You make an attempt. Nobody is perfect here. I'm telling you guys, everybody has got their own shortcomings. But you have to make sure that you gain that confidence when you face the interviewer. That's what I'm saying. Yeah, anyone else, guys? Next question. Top 10 custodian banks. Oh, before next question, what is custodian bank? Its role and functions. Anyone else?
Yes, sir.
Yeah.
Sir, a custodian bank is a financial institution that safely holds and protects financial assets like shares, bonds, mutual funds, units on behalf of investors. And its role is to safeguard these assets and helps in trade settlement and also helps in record keeping and cash management, and it helps in foreign investor support.
Hmm. Very good. Anyone else, guys? Hello? Boss, this question will come in an interview process. What is a custodian bank? What is the role and functions? Top 10 custodian banks. Should be aware of it, yes? Yeah? Anyone else?
So,
Boss? Oh,
sir, I
yes.
would like
Yeah, Mahak,
the
please go ahead. Please
custodian
note,
bank
guys.
is a
Just 1 minute. Please note, I'm giving everyone an opportunity. Please note, you need to pick up the opportunity, take up the opportunity, and then go ahead. Yes, that is what you should be. Should not be like normal spectator like. Then it will become tough later on. You do here, you participate, and you open up yourself. You may do mistakes. I'm fine with it. I told you many times. We are not. I'm not judging anyone else here. Yes, please note that. Yeah, go ahead, Mark.
A
Yes.
custodian bank is a specialized financial institution responsible for safeguarding financial assets like stock, bonds, and cash for individuals and institutions. Unlike traditional banks, they generally do not offer personal loans and checking accounts. The role of custodian bank is safekeeping the customer's assets and maintaining the client's ownership. The main function of them is settlement of the transaction and record keeping and reporting of the assets. time to time to their clients.
Very ठीक है. Fine.
Sir, I would like to add roles of custodian
Yeah,
bank.
please go ahead.
Sir, the main role of custodian bank will include first holding security safely, then settling the trades, then handling dividend and interest, then maintaining the records and reporting and compliance.
Very good. Very nice. So, guys, you all understood what is a custodian bank. It's a specialized financial institution which safeguard the client assets. Main function is safeguarding, safekeeping, safe records, all that is safe custody of client assets. They also have other role and functions like income collection, corporate action processing. They also have settlements, compliance, regulatory reporting, all that they do it is. So we have a big module. We have a special module on custodian business, custody operations in the module 2. We'll discuss that. Okay. Here you should know what main function, not much detail. Yes. Yeah. Swami, do you have anything?
Yes, sir. I want to say that it also is one of the role of corporate action processing, like dividends, bonus shares, stock
Very
splits,
good.
right issues,
Very
and
nice.
also merger and acquisition adjustments. So it ensures client receive all entitlements,
Very good. Very
and
nice.
they prevent loss, theft, and fraud.
Good. Okay. So, guys, can someone do the research? What are top 10 custodian banks as per assets under custody? They
So
call it
world
as
largest,
assets
one
under
of the
custody. Yes.
BNY Mellon is one of the world largest custodian
Very good.
bank.
BNY Mellon. How much worth of assets under their custody? Roughly $45 trillion. First, you should know how much assets under their custody also. Yes. It's okay. If you don't know, that's fine. Next. Top one is BNY Mellon. Next. Yes. Ashna.
State Street is the second one.
Very good. State Street.
HSBC Securities,
JP
Then
Morgan
JP
also.
Morgan,
APMC. Very good.
JP,
Northern Trust,
then
Northern
Citibank,
Trust. Very good.
Citigroup,
Citigroup.
HSBC,
HSBC. BNP Paribas.
Northern Trust,
Standard Chartered,
Standard Chartered. UBS. Brownie Brothers Harriman.
Societe
Yes.
Generale Securities,
Society General.
MUFG Investors,
MUFG. Yes.
and
So, boss, who are
is
these? These are your future employers. Please note that. Yeah. Please note, these are your future employers. So if you want to make a career, you should know who are your future employers and start applying for the opportunities. I told you, you're all investment bankers. You have done a certification. You're trained by us. You're a special person in the market compared to others. That specialty is that you have learned the subject and you have that skills identifying the products, processes, and markets and participants. That's what differs you from others. So that is the specialty that you have. So now, guys, once we start module 2, in halfway through module 2, you update your resume and start floating in the market. Go to the market because market will give you an opportunity for you looking at your skill sets. So please note that. So don't wait for the opportunities to come. Go after the opportunities. Yes. So you have I want 50-60% of the batch to get placed before the batch completion. That's my objective here. Yes. You should get opportunity clearing. Yes. But that will come only when you are skilled person. The moment you are skilled, everybody wants you in their team. But if you don't have skills, then nobody wants you, how much ever you qualified and all that. Please note that. Okay. Good that you have find out the top 10 custodian banks. You can find out top 50 custodian banks that have presence in India that are your future employers. Top 50 investment banks, top 50 custodian banks. Most of the investment banks also have got custodian business, but separate line of business. That's not combined in the investment bank. That's a separate line of business, but that's a different line of business for them. Okay. Okay. Next, what is a broker firm? Their role and functions. Yes, guys.
Sir, broker
For
firm
a
is a
broker
company.
firm,
Yeah, who's speaking? Priyanka?
yeah,
Yes,
Priyanka.
Yeah, Priyanka, go ahead.
yes, sir. Broker firm is a company that which acts as an intermediate between the investors and the financial markets. Also, it provides the service for buy side and sell side service like securities, bonds,
Hmm,
mutual fund, and derivatives.
very good. Yes. Yes, Swami.
Also, sir, I want to say, sir,
Yeah.
broker firm is acting like an intermediary that execute buy and sell orders of securities on behalf of the investors.
They act as a agent. Yes.
Yes, agent.
Act as a agent. They don't become buyer for seller, seller for buyer. Yes. They simply get that order and get it into the market, get it executed in the market. Yes. That's what
Yes,
their
sir.
broker does. Yes, Ashna.
So, firm is a financial institution that help investor to buy and sell the securities like stock, bond, and other financial instruments.
Very good. So brokers, how they earn money? How they earn money?
So
By
brokerage
charging
fees.
Fee.
By charging commission fees. Yes. Do you know there's a
Yeah.
company called Grow? Hello, guys.
Yes, sir.
Yes,
Yes.
sir.
The
Yes,
company
sir.
that
Yes,
came
sir,
for
we know.
public
Yes.
Yeah.
recently came for public issue. What is that public issue
Yes.
price? Public issue price was how much? 111 rupees or 112 rupees, yes? 112
Yes.
rupees per share. Yes. And then it listed around 120 something and then it went to 170, 180, yes? You clear? Guys, why so much craze for broking business in India? Because a lot of money is making, yes, a lot of volumes are happening. And these guys grow Upstocks, Zerodha. They are the new models that are emerging in the brokerage business. So brokerage there, you know what is the value of Grow company? 1 lakh crore market capitalization. 1 lakh crore market capitalization. So you can understand the kind of craze that is there in the brokerage business. So broking business is one of the big business, but they are retail brokers. They are not institution. They may be doing some institutional brokerage, but investment banks they do mostly institutional and high net worth individuals and family offices, corporate clients. They do their main. But Grow is all targeting at retail customers like you and me. Yes, yeah. Any one of you have got account with Grow, guys?
Yes,
Hello.
sir.
Yes. Yes, sir.
Vanshi is having. Komal is having. Yes, so you can understand that they are giving their brokerage services through their app. Yes, you download app and you always work through app only. Yes, that's a business model that is there. Most of the brokerage houses now they are getting into this businesses. Yes, online business. Yes, traditional business is gone now. Where people visiting office. You know, in 19, I'm talking about 1998 or 2000 time. The investors go to the brokerage office and sit in that office. They'll provide TV and all that, yes. And there'll be a dealer who's there. There'll be a operator who's punching the orders. Sitting in the front of screen, they used to tell the orders, telling their code, and that order was getting executed. That was the case olden days. Today, you need not visit any brokerage office. Just download their app, monitor, trade through app. You can also call and trade, but that's how the business models have changed. And these guys, Upstarts and Zerodha and Grow, they're growing like anything else. They're making a lot of business. Do you know Zerodha is not coming for IPO? They may come IPO for sometime next year or whatever it is. But the moment they come, their market valuation will be much higher than the Grow and other companies. Yes, because they are one of the largest broker players. Good guys. Next, what is a dealer or market maker? Their role and functions. Yes. Pulse. Yeah. What is a dealer? A market maker? Yes, Komal. Go ahead.
Yeah, dealer is a financial market participant who buy and sell securities on their own behalf, like using their own firm's money.
Very good. So they are acting as a principal in the trade, yes. But whereas brokers only act as agents. but these guys are principal. That means they need to put their capital into the business. They should be ready for buying, ready for selling. They're called market makers. Yes, they help the participants in the market, the investors, to sell their assets and buy the assets. So they do both sides, buy side and sell side. They're ready to buy at a bid rate, and they're ready to sell at a ask rate or offer rate. So bid ask quotes they keep on giving us. That's what a dealer does. Yes. And dealer, tell me guys, which business is risky, brokerage or dealer business?
Dealer
Dealer.
business.
Dealer
So
business is more
business is risky. Why dealer business risky?
Because they take the trade from their own account and their own money is involved in it. But in case of broker, they don't take trade from their own account. Only they connect investor and the exchange.
Very good. So broker business is only agency business. They just get commissions as they don't take risk of the trade. Yes. So it is all the risk lies with the client only. But whereas in dealer business, suppose say I'm an onion dealer. I deal in onions. I buy onions and I sell onions. My buy rate is 20 rupees, sell rate is 22 rupees. So I make 2 rupees spread income, trading income and all. I hold 1 lakh tons of onions because I need to do these businesses. So I have 1 lakh tons of onion. Whenever the buyer comes, I can deliver that onions to the buyers if the buyer is coming. Yes, so that's how the business. So my average cost of onion buying when I bought it is around somewhere say 20 to, or 18 rupees or 19 rupees. Yes, that's my average cost. And currently, I'm giving the bid rate and ask rate. Bid rate 20 rupees and ask rate 22 rupees. Imagine if there's a huge supply of onion comes in the market. What will happen to onion prices? What will happen, guys?
Come down, sir.
It will crash. Yes,
and
suppose it crashed to 15 rupees. Tell me, what is my holding? My holding is 1 lakh tons of onions at each one 19 rupees a kg. Now it is 15 rupees. I'll have straight away inventory loss. Yes, 4 rupees per kg. I can't sell at 22 now because now you have to give the market quote. Rather, dealers are quoting 15, 16 or somewhere that 16, 14. I can't quote 20, 22. Yes, nobody will buy from me. Yes, is it clear? Then I have to come to the near to the market prices. What is there? I have inventory loss. So that could be huge risk for the dealers. So dealers can run the inventory loss. They can also make inventory gains. Imagine the onion prices shoot up. Now the price is 30 rupees. Now they will buy sell at near to the 30 rupees. So they are holding of 1 lakh tons of onions at 18 rupees, 19 rupees kg. So they can make a killing, yes. So that's a business, risk business. Is it clear, guys? Hello? Yeah. How
Yes.
dealers make money? How dealers make money?
By the difference between bid and ask spread.
Ask rate. So bid ask rate differences that makes the money for the dealers. Very good. Okay. Next question, guys. What is an exchange and its role and functions? Yes.
Exchange is like organized marketplace where people can buy and sell financial assets.
Very good. Anyone else, guys?
And your company will listed in that in this market, sir.
Yeah, exchange market. The other name is listed markets. Yes. Other name is listed market. Listed means where the securities which are listed on the exchange and traded. That's called listed markets. Yeah.
So actually, it provides trading platform for the buyer and the seller, where the buyers and the seller meet in a group called as an exchange, and it facilitates for the capital formation of a company.
Very good. So it's a trading platform. Yes. Exchange is a trading platform where buying and selling takes place. Yes. Yeah. So it's a centralized market. Yes. Where the trading takes place. It's a regulated market. It's a transparent market. It's a liquid market. Yes. So basically market is where exchanges are there. Yes. Very good. Guys, can somebody name some top exchanges in each of the markets? What are top exchanges in US?
New York Stock Exchange, Nasdaq in
Nasdaq
USA,
and HNX.
London Stock Exchange, Hong Kong, Euronext,
Very good.
Bombay Stock Exchange.
Very good. Very good. So each markets have got stock exchanges. These stock exchanges, in each market, we have prominent exchanges. So US, New York Stock Exchange and Nasdaq. In
Nasdaq.
London Stock Exchange. And in Europe, Euronext, Frankfurt, Amsterdam stock exchanges are there. Then you have in China, Shanghai Stock Exchange and Hang Seng Stock Exchange. In Hong Kong, it's a Hong Kong Stock Exchange. In Singapore, there's Singapore Stock Exchange. Yes, like in India, we have NSE and BSE stock exchanges. These are the exchanges. Yes, very good, guys. Now let's move, guys. Next 11 to 20. 11 to 20, guys. Glance through. I'll give you 2 minutes time. You need to come up with a question, says which somebody has got some challenges. I'll take that questions. 2 minutes time. Yeah, guys. Anyone has got any doubts in this?
So I have one question.
Yeah, please.
So what is the Central Securities Depository and what is the role actually?
Very good question. So central security depository bodies are those bodies who keep the securities ownership records in electronic form. Like in India, we have NSDL and CDSL. NSDL, what is NSDL? National Security Depository Limited. CDSL, Central Depository Services Limited. So the two bodies are there in India. What is their job? Their job is to keep the securities records, ownership records under central place. So electronic ownership of securities. Suppose you are holding 100 shares of Reliance. How do you know that you are owner of 100 shares of Reliance, Tommy? How do you know that you are a 100 shares holder?
Sir, I will have the Demat account where I will
Who
see
will
that.
give you Demat account?
Sir, the broker.
Hello, broker is a depository participant. They are not giving you Demat account. Demat account is given by NSDL or CDSL. The broker will have a license from NSDL or CDSL. You can go and check your holding statement. In that, it will be written NSDL or CDSL. So it is the service provided by brokers. Brokers are only agents. They are not the providing the Demat. Demat account is given by NSDL
Yes, sir.
or
NSDL.
CDSL. Is it clear? So you are a
Yes,
owner
sir.
of 100 Reliance shares. How do you know? Because you get a statement in your Demat account that there is 100 shares of Reliance in your name.
Yes, sir.
Yes, it's credited in your account. Yes, so it is shown there. So that's why you say I'm a 100 shares shareholder of Reliance Industries by 100 shares. So this is what it is. Where it is that record that's centrally located in NSDL or CDS. In India, we have two depositories, but globally, most of the markets have single depository. So we have two depositories in India. So your record may be either NSDL or CDSL. Is it clear?
Yes, sir.
So central security depository bodies are they are the holding the securities ownership records. So tomorrow, Saumik, you want to transfer shares to Vamshi. How do you transfer? You have to send a request to your DP, depository participant, that Girodar, whatever it is, send a request that please debit my account and credit Vamshi account. So you have to give the Vamshi account details to NSDL, to the DP, because NSDL will not directly talk to you as they will only route it through the depository participant. So your depository participant is Zerodha. So you need to request Zerodha to debit your account and credit Vamshi account. Vamshi account may be in another DP. Vamshi account is with Grow. Your account is with Zerodha. Still you can transfer, yes? Is it clear? So Demat account is given by whom? Given by the depositories through their agents. That's the depository participants. Is it clear? Hello?
Yes, sir.
So suppose there are 10 crore shares are there in Reliance Industries, 10 crore shares. Everything is electronic. All shares are in electronic form only, 10 crore shares. Out of these 10 crore shares, 6 crore shares records with NSDL. 4 crore shares records with CDSL. You got it? Hello? 6 crore shares records with NSDL. 4 crore shares record with CDSL. Is it clear? Total 10 crore shares issued by Reliance Industries. And that entire 10 crore shares are in dematerialized form. Then where is the record of ownership? 6 crore shares records, ownership record is with NSDL and 4 crore shares ownership record is with CDSL. Is it clear? Hello?
Yes, sir.
Your record is with NSDL
NSDL.
via Zerodha. Vamshi record is with CDSL via Grow or Upstocks. Is it clear? Both of you are Reliance shareholders. You are holding 1000 shares, he is holding 600 shares. Your 1000 shares records is with whom? With NSDL. But through your broker. Who is your broker? Zerodha. And Vamshi is holding 600 shares. Where? In CDSL. Through through Upstocks. Is it clear?
Yes,
Boss
sir.
Swami, did you understood
Yes,
this or not?
Yes, sir.
That's what depository institutions. I'll give you another example. Swami, you are a owner of a house or a plot or a flat. How do you know that you are a owner of a flat?
Sir, I have the document of the flat.
What is the document? Where is
Physical
the document?
physical document, sir.
Who gives this document to you?
Sir, registration office.
Sub-registrar, yes.
Yeah.
Sub-registrar will hold what? Tomorrow you want to sell your flat to Vamshi. How do you sell it? How do you sell it?
Sir, I have to give a ad or something else.
No, ad no, boss. Vamshi and you are friends, yes. So Vamshi wants to buy your flat. How do you sell it?
So
How do you
again, we have to
transfer
go
it?
to the register office.
You go to register office,
Yeah.
and register officer, what they will do? They will strike off your name and enter Vamshi's name, yes? Yes,
Yes,
sir?
yes.
So like that, CDSL or NSDL, what they do? They hold the securities ownership records in electronic form, and they can transfer the ownership from one party to another party. Is it clear?
Yes, sir.
You understood now what is depository function?
Yes, sir.
Yeah. Okay. Guys, any other questions? Yes. Yeah. Boss.
This clearing house and clearing corporation.
Clearing house and clearing corporation. Very good. So Clearing house is a body which clears and settles the trade. I'll give an example. NSE is a trading platform. NSE is an exchange. It's a trading platform. What happens in the NSE? Buy-sell transactions, yes? Buy-sell transactions. And once NSE does the trades, it will transfer all the trades to its clearing house. There's a National Securities Clearing Corporation Limited, which is a subsidiary of NSE or a group company of NSE. It's a separate legal entity. So they transfer that trade details to NSCL. Now NSCL will do the clearing and settlement activity for all the trades that happens on the NSE. Is it clear? So NSE clearing house is NSCL. So NSCL, what it does, from buyer they receive cash, and from seller they receive securities. Is it clear? And they pay securities to the buyer and they pay cash to the seller. Is it clear?
Okay, sir.
That is called clearing house. Clearing house will do this activity of clearing and settlement. Trading takes place where? Trading takes place on the exchange. Is it clear?
And sir, these
Settlement
bodies
takes
are
place.
regulated by whom, sir?
Sorry?
And these bodies are regulated by whom, sir? SEBI or only or RBI?
Because everybody who is there in the securities market must be registered with SEBI. Without SEBI registration, you cannot do anything in this securities markets in India. Similarly, in US, which is the US regulatory body?
Yes, yes.
Sorry, ACCR. SEC, boss, not ACC.
No, sir, SEC.
SEC. What is full form of SEC?
Securities Exchange Commission.
Securities and Exchange Commission of US.
Yes, sir.
So they do the, the business of regulating the securities markets in US. Yeah. Okay. So you need to understand that everybody is needed license to operate. Whether you are a CSD or a clearing house or a SEBI or exchange or investment bank, custodian bank, they all need that license from SEBI. Is it clear? Yeah. Guys,
Yes, sir.
any other questions here? Guys, any other questions?
Sir, what is netting of traders?
Netting of?
Traders.
No. See, in the exchange markets, suppose you do, suppose you have done 2 trades in the exchange, one buy trade, one sell trade. Okay, you bought 1,000 shares of ACC and you sold 500 shares of Reliance Industries. 1,000 shares of ACC at 1,000 rupees, 10 lakhs rupees, and 500 shares of Reliance at 1,500 rupees, 7,50,000 rupees. Okay.
Yes.
What is your cash side? Cash side, you have to pay 10 lakhs and you will receive 7,50,000. Yes?
Yes.
Yes or no? But
Yes.
they will not do 2 settlements. They will do the net off. What is the net amount? 2,50,000. Is it clear?
Yes.
Soumik sir, Mohammed, you have to pay 2,50,000 and you have to deliver Reliance Industries shares to the clearing house. Is it clear?
Yes.
So you have to pay 2,50,000 and you have to deliver Reliance Industries shares, 500 shares to the clearing house. You will not directly do it. Your broker will do it through you. Yes? You cannot directly interact with NSE or NSCCL. You have to go through your brokers. Yes. So brokers will interact with the clearing house. Yes. So you will pay net amount 2,50,000 and securities you will deliver 500 shares of Reliance. And what you will receive? 1,000 shares of ACC. Is it clear?
Yes.
This is called netting. Yes.
Yes. Yes. Okay.
So that's what it is. Yes. Okay. Any other guys? Any other questions here? Hello? Boss, this session is for you to clarify your doubts. Yeah. Okay. So guys, I'll only yes, Soumik, you have any questions?
So, what is underwriting and IB role in underwriting of securities? This question. Doubt.
Underwriting?
Yes.
So what is underwriting, guys? Can anyone? What is underwriting?
So a guarantee to the company that its new shares or bonds will be sold.
Okay. Because underwriting means giving guarantee, yes? Giving guarantee, yes, to the issuers. In case public doesn't take up, they will take up the shares. Is it clear?
Yes, sir.
Guys, any other questions? Hello?
Sir, I have a doubt.
Yes. Yes, boss. What is your question?
Sir, I have one question. Does
Yeah,
why do
please.
company go for private placement?
Very good question. So private placement is a quick way of raising capital. Yes. If you want to raise money quickly, what is the best way? Private placement. Because public issue takes a lot of time. Because a lot of regulatory compliance and time-taking process, costly
And
affair. It's very costly. Yes. Do you know Lenskart raised capital? Yes. Recently. Yeah.
yes, sir.
Guys, how much capital they raise? Guys, can somebody find out what is the Lenskart IPO size?
7,278 crores, sir.
7,000 crores. Do you know how much money they paid in this public issue process? 400 crores. 400 crores only in marketing the issue and investment banker fee, underwriting fee, regulatory fee, printing cost, broker distribution fee. You understood? It's a damn costly affair, yes? Almost they end up paying 5% of the issue. Yes? So this is what it is. If you want to raise money without paying huge cost, which way you'll go? Which way you'll go?
Private placement.
Private placement, yes. So private placement helps you in reducing the cost of issue, yes, and it's a quick way of raising capital, yes, and there is no much regulatory compliance, yes. So but it's a private negotiation, yes. But if you want big money, like 7,500 crores, something like that, what is the way out?
IPO only, sir.
Public issue process, yes, public issue process. You can't raise that much capital in a private placement. Is it clear? Is it clear? Yes. Any other questions?
Sir, my question was that when investment banks do underwriting service, then what's their benefit in this? Because if shares are not sold and then they will buy those shares.
Yeah, well, suppose say Anas, I am raising capital in the public issue process, and I appoint you, and you come forward to me that I will underwrite your securities. So I said, okay, you go and underwrite the securities. Will you do free service like this? Hello?
No.
What you will ask? You'll ask underwriting fees.
Yes.
There's underwriting fees, yes. Underwriting
Okay.
fees maybe 3%, 2%, yes. 3% of the amount. Suppose you have given 100 crores commitment to me. In case
Yes.
public doesn't take up, you will take it up, 100 crores worth of securities. For that, you charge 3% commission. Is it clear?
Yes, sir.
3% fees. Imagine if the entire 100 crores are sold in the market. I need to pay 3% to you, yes? Is it clear?
Then it's profit.
Nobody will do underwriting free of cost, yes? Hello?
Yes.
But this is a business, yes? Okay.
Yes. Okay. Thank you, sir.
Any other questions, guys? Yes? Was all of you clear? Good. So my question starts now. Guys, can someone explain that 11th question? What is clearing house? It's clearing corporation or clearing corporation, its role and functions. Please go ahead. Boss, I'm asking you. Anyone? Yes,
So,
Mohammed? Hmm.
so clearinghouse is a specialized financial institution that sits between a buyer and seller in a trade and
Hmm.
guarantees that trade will be completed safely, correctly, and on time.
Very good. Anyone else, guys?
Sir, a clearinghouse is an institution that acts as an intermediary between buyer and seller in a financial market to ensure that every trade is settled smoothly,
Hmm.
and it also guarantees that trade and reduce counterparty risk default. Its key
Hmm.
function include trade confirmation, netting of the transaction, margin collection, and settlement.
Hmm. Very good. Very nice. Anyone else, guys?
Yeah, so house is a financial institute that provide clearing and settlement services for financial instrument because when you trade in market, there is a risk that buyer won't pay or seller won't deliver. Share.
Hmm.
So
Hmm.
the roles are like confirm the trade details, then validate buyers and sellers. If buyer fails, then clearinghouse still pays to seller. If the seller fails, clearinghouse still gives share to the buyer. Also, it delivers delivery of securities, then funds.
Very good. Yes. Guys, anyone else? Hello? Guys?
Sir, clearinghouses reduce the counterparty risk and also
Very
increase the market stability, and also
good.
ensures that trades are settled efficiently and securely.
So, guys, you understood the importance of clearinghouses. Clearinghouse is one of the important market participants, yes, which does the function of clearing and settlement. Yes, they ensure that the trades happens on the exchange. All exchange trades goes through clearinghouse for settlements. Yes, so their job is to ensure that smooth settlement. The buyer should receive securities and seller should receive cash. Yes, that's what they do, clearing and settlement activity. Yes, a very important element. And they collect margins to safeguard the solvency of the trade and all that. Yes, for that they collect margins and all that. So they are very important elements in the financial markets. Yes. Okay. Guys, next, top clearing houses in each of the global markets. Which is the clearing house in US? First, US.
DTCC.
DTCC, Depository Trust and Clearing Corporation. So in US, there's a body called DTCC. It does two functions. It does depository function. It also does clearing corporation function. That's why they're called DTCC. Yes. Yeah. Good.
Yes.
Next, in UK.
LCH.
LCH. LCH.
London Clearing House. Yes. In Europe.
Eurex.
Eurex.
Euroclear or
Euroclear
Euroclear.
and Clearstream. Yes, Euroclear
Clearstream.
and Clearstream. There are two bodies. Please note this Euroclear and Clearstream, they act as a clearinghouse and also act as a depository in those markets, yes, as a part of it. So you need to be aware. There may be many clearinghouses. Can you please tell me what is a clearinghouse in India?
NCL.
NCCL, sir.
NSCL, yes. That is one body. The other body,
CCIL.
ICL.
CCIL, Clearing Corporation India Limited. Next. India International Clearing Corporation is there, yes,
Yeah, I
ICL.
see. I see.
That is basically Bombay Stock Exchange Clearing House. Yes. So like this, the clearing houses are there. There's a CME Clearing House. Yes.
MCX.
Chicago Mercantile Exchange. MCX will have its own clearing house. Yes. Yeah, guys.
Yes, sir.
Okay. Next question. What is a depository institution or rather central security depositories and their role and functions? Yes, guys. Go ahead.
So our depository institutions is an organization that holds securities in electronic form and helps with the safekeeping, transfer, settlement, and record keeping of these securities.
Very good.
And its role is safekeeping securities,
Mm.
settlement of trade,
Mm.
and record keeping maintains record, reducing risk in the market, and its use because before demand shares were physical papers, certificates,
Mm.
so loss, fraud, delays were common. But
Mm.
CSDs solved this by converting physical certificates into electronic form
Mm.
and keeping investors' securities safe.
Very good. So guys, olden days we used to have physical certificates. Physical certificate problem is very big problem. Yes. If you lost the certificate, you lost a lot of value of your money. Yes. So what the depository bodies did is they converted all the physical securities into electronic form. Yes. And they hold that electronic record of ownership at a central place. Yes. Who holds the ownership details of Reliance Industry shares? Guys, where is the ownership details of Reliance Industry shares?
NSDL or CDSL, sir.
NSDL or CSD.
NSDL or CDSL. Suppose say you are in Delhi, and who holds the ownership of flats in Delhi in particular area? Yes. Yeah. Who holds that record of ownership of flats and houses?
Delhi Sub-Register Office.
Delhi Sub-Register Office. So like that, these guys hold a record of ownership of securities. And these institution can do the electronic transfer of securities. They can simply debit the account and credit the account, yes, through book entry system. So tomorrow, say Mohammed sold his Reliance shares and Vamshi bought it. So both of your records are with the depository body, yes. So what the depository body will do? Debit Mohammed, credit Vamshi, yes. Is it clear? Boss, is that simple? Transferring
Yes,
the
sir.
securities, yes. That is the job of depository bodies. Okay. Okay. Next question, guys. Top CSD or depositories in each of the global markets. Who is the depository in US?
DTCC.
DTCCS. So just now we discussed DTCC is a clearing house. Now we are saying DTCC is also a depository body. Yes. Is it clear? Guys, please note. So DTCC has got dual function. It acts as a clearing house. It also acts as a depository body. Yes. Is it clear? Guys, you all understood this? Now, who is the depository in UK? UK, earlier they used to call it as Crest.
Crest, yeah.
Crest. Now it is Euroclear. Euroclear UK, because Euroclear has taken over the Crest. Is it clear? Yeah. Guys, you understood this? Hello?
Yes,
Boss,
sir. Yes, sir.
who is the depository in Japan? Japan is depository body. Boss, somebody can do the research.
Chestec, I think.
JASDEC, yes? Hello?
Yes, Chestec.
JASDEC, yes? That's the depository body, yes? In in Japan, yes? Which is the depository body in China? Chinese depository
Shanghai
body.
and Shenzhen.
CSDC.
Sorry?
CSDC. China
CSDC.
Security Deposit and Clearing Corporation.
So CSDC. Like that, in every country will have depository bodies, boss. Which is the depository in Europe?
Euroclear and Stream.
Euroclear and Clearstream. So you understood, guys, this Euroclear, Clearstream, and DTCC, they do both functions, clearinghouse and depository functions. Yes. In India only, we have depository separate, clearinghouses separate. Yes, as a part of. In some other parties or some other countries also similar like that. Yes. Is it clear?
Yes, sir.
Next, what are financial markets and its purpose? First, Anyone? What are financial
Yes, sir.
markets and its purpose? Yes.
Sir,
So, yeah,
Yeah,
Drishti, go on.
go ahead, Komal.
yeah, Komal, you
Okay.
can go ahead.
Yeah, thank you. So, it is a platform where buyer and sellers come together to trade financial asset like stock, currencies, derivatives, bonds. Purpose like raising capital, help companies to raise money by issuing shares, then government funds by issuing government securities, price discovery, provide individual or institution a place to invest their money for returns.
Very good. Guys, anyone else? Yes, go ahead, Drishti.
Yes, sir. Sir, financial market are platform where financial instrument like stock, bond, and derivatives are traded. The purpose is to channel fund from investor or saver to business and government that need the capital. They help in price discovery, liquidity creation, and economic growth. They also allow investor to earn return while helping company raise money.
Very good. Yeah. Anyone else, guys? Hello? This is a very important question. Please note, every interviewer will ask this question. What are financial markets and what is the purpose of financial markets? Yes? Yeah?
So financial market also facilitates price discovery of each stock that has been traded in stock exchange, and it also helps for the economic growth of the country, and it facilitates the liquidity that the investors can anytime sell and bought their stocks. And also, its main purpose of an financial market is to uh, is a formulation of an capital.
Very good. So, guys, the purpose has to be very clear here. Yes, you should know each purpose of the financial markets. Yes, so the purpose is very clear: price discovery, channelizing the funds from deficit entities to surplus entities to deficit entities. It's called capital formation. Then people can use financial markets for investment purpose, speculation purpose, hedging purpose, arbitrage purpose. Yes, they can use any of these purposes, and tax saving purpose, regulatory compliance purpose. Yes, they can do any of these purposes for a financial market. And financial markets also reduce cost. What cost gets reduced, guys, during because of financial markets? Hello? Boss? Yes? Which cost gets reduced because of financial markets?
So transaction cost,
Very good.
information cost,
Very good. Yes, transaction cost and
information cost.
Yes, information cost, search cost. First, buyer need not to search seller, seller need not to search buyer. Yes, that gets reduced. Yes, because both of them are coming to a platform. Yes, so financial markets. Yes, so the purpose of financial market is rising capital. Yes, thereby economic growth. All that can happen because of the financial market space. Yes. Yeah. Any other questions, guys? Anyone else? Okay. Okay. Next, what are types of financial markets? Pause. Yes. What are types of financial markets?
The different types of financial market will include capital market. Under it will come stocks and bond. Then comes money market, which will include short-term instrument like treasury bill, then depository. Then comes derivative market, which will include future, option, and swaps. Then comes for foreign exchange market, which will include currency trading. Then comes commodity market, which will include metal, energy, and other product like gold, silver, and all.
Very good. Yes. Guys, anyone else? Boss, I'm asking you, it's a platform of yours. You need to contribute, yes, for your own learning. This is a practice ground. Hello? Guys, I'm asking you, anyone else? Yes?
Yes, sir. So There are various types of financial market like capital market, which is deals with long-term securities more than 1 year. Equity market, debt market, then money market deal with a short-term instrument which is less than 1 year, like treasury bills, commercial paper, certificate of deposit. Then foreign exchange market, where currencies are bought and sold globally. Commodity market, which is trading physical commodities, gold, like gold, silver, oil. Then derivative market, which is trading future options, swap, forward based on underlying asset. And equity market, insurance market, mortgage market, cryptocurrency too. Yeah.
Very good. Fine, guys. So you know all of you know types of financial markets. Yes, basically capital market, money market, and then we have currency markets. Then you have commodity markets and derivative markets. Derivative markets are there everywhere. That's understanding you should have as types of markets. Okay, okay, good. Each market has got its own purposes. Yeah. Next, what are types of financial? What are capital markets? Its purpose and classification of capital markets, guys.
So capital market is a platform where the governments and company or the other entities can raise a long-term funding by issuing securities like stocks and bonds. In capital market, we have a primary market and secondary market. Usually, in primary market, the new securities are sold directly to the investor, like a IPO, which is a equity and debt also being issued in the primary market. Whereas in secondary market, the existing securities are traded among the investors.
Very good. So, guys, anyone else? What is capital markets? Yes. Yeah. Yes. Vamshi.
Yes, sir. Basically, primary capital markets are for long-term financial instruments and whose maturity is more than 1 year. And also, these capital markets raise the funds for the long-term assets for the business. And we can in capital markets we can see that two types of one is primary market and the secondary markets. Yes.
Very good. Anyone else, guys? Hello?
So the purpose of capital market would be mobilizing the savings and it facilitates for raising the capital formation, and it also facilitates liquidity price discovery, and it also for the main purpose of capital market is risk management.
Very good. So, guys, all of you are clear about capital markets? Yes. Yes. So, capital markets are the markets. It's meant for long-term instruments, through issue of raising capital to long-term instruments. So it's a market for for long-term purposes, for either investment or raising capital over a long-term purpose. You use the capital markets. The purpose is like financial markets. Here you raise capital and you for long-term investment purpose, and you also use capital markets for hedging, speculation, arbitrage, price discovery, all that purpose of financial markets. Same applies to capital markets also. Classification is, that there are two markets within the capital markets. One is primary capital market, the other one is secondary capital markets. Yes. So you need to understand the primary and secondary capital markets as a part of this. So this is where you need to prepare thoroughly, understanding these concepts as a part of this. Yeah. Okay. Yeah. Next, guys, what is primary capital market and what are the methods of raising capital? Yes. Guys, what is primary market means?
Sir, the primary market is where company issues security for the first time to raise new capital.
Hmm.
And the
Okay.
purpose is
Hmm.
the purpose is financing expansion, debt repayment, and working capital.
Very
And the
good.
different methods can be IPO, FPO, raising equity, private placement, and preferential allotment.
Very good. So these are the different methods of raising capital in the primary market size. So primary market is a market where companies can raise capital directly from the investors through issue of securities. Yes. So these methods could be public issue process or rights issue process or private placement processes. So you can raise capital either of these three methods of raising capital. Yes. Primary means where the new securities are created. Yes. New securities are issued in the market. That's called primary capital markets. Yes. Where the securities are created. It's an action between issuers and investors. Yes. Is it clear? Next, guys. What is an IPO? Its process. An investment bank roles in IPO process. Yes. Hello, guys. Boss. I'm asking everyone here. What is an IPO?
Initial public.
Sunita. Yes, Sunita. Go ahead. Hmm.
Sir, IPO means initial public offering, sir.
Hmm. Yeah, that's a full form of IPO. What it is actually?
Sir, I am audible.
Yeah, you're audible. Please go ahead. Yes. Sunita. Okay. Guys, anyone else? What is an IPO?
Sir, may I?
Sir, IPO stand for initial public offering.
Hmm.
It's when a private company issues share to the public for the first time.
Hmm.
Its process include appointing investment banker, due diligence, pricing, roadshow, and listing. Investment bank act as an underwriter, advisor, and help with the pricing and marketing. Company go IPO to raise capital, increase visibility, repay debt, or allow early investor to exit.
Hmm. Very good. So IPO is a method of raising capital. First time a private company going for a public issue process. In that process, they raise capital through issue of fresh issue of shares, or an existing investor may sell their shares. It's called offer for sale, or combination. That means some fresh issue, some offer for sale in the public issue process. Yes, that's called IPO process. Yes. In this, what is the role of investment banks? First, what is the role of investment banks in this process? Yes.
Investment bank can act as underwriter, advisor, and help with the pricing and marketing.
Investment banks can act as a lead managers. Investment bank can act as a advisors. Investment bank can act as a underwriters. Investment banks can act as a distributors, marketing the issue. So they can act in a many capacities as whatever they feel that they should tie up with that issue as. Lead managers, they do the end-to-end job. Underwriters, they take care of the underwriting of the securities and they're ready for that. And same, the lead manager also can be a underwriter. Yes, the lead manager can also be a advisor. The lead manager can also be a distributor. Also, they can play all roles as a part of their in the operations, primary market operations. Yes. Hmm. Next, guys, what is FPO? What is FPO?
So FPO is follow on public offer, where
Hmm.
it is just the opposite to an IPO, where for the company come for an FPO, as an additional capital for improvement and the development of the company. They go for an FPO. There might be two type of FPO, like dilutive FPO and non-dilutive FPO. If a company issues a share to the new existing shareholder, then it is a dilutive FPO. If the company issues the FPO for the existing shareholders, then it's called as a non-dilutive FPO.
Very good. Anyone else, guys?
Sir, I have one doubt here.
Yeah.
Sir, FPO will be done in primary market or secondary market?
No, FPO is also in primary market only. There is no secondary market. It's primary market only. So you have to apply for FPO. Yes.
Okay.
Yeah. So there is a company called Vodafone Idea, yes, which rise FPO process. 10,000 crores they rise, yes, through FPO process. Sometime back, ICICI Bank also gone for FPO process. FPO means second time, third time, fourth time, nth time with the companies coming for a public issue. It's called FPO. First time is called IPO. Is it clear? Yeah. Yeah.
Yes, sir. It's clear. Yes, sir.
Okay. Guys, any other questions here? Yeah. Next. What is private placement of securities? Why do companies go for private placement? I just know explain. You need to now explain, re-explain. Yes. Hello? Guys,
Sir, am
what
I
is
audible?
private placement? Yes.
Hello.
Yeah, Mohammed.
Yes, sir.
Hmm.
Private placement means a company sells its shares or bonds directly to a small group of selected investors. And
Very good.
companies go for it because it's a faster way to raise money
No,
and
very good.
it less cost, no marketing, no listing expenses, and it has less regulations and flexible terms and confidentiality.
Very good. Anyone else, guys? Hello? Boss, what is private placement? Okay. Fine. Next. What is underwriting and what is the role of IB in underwriting the securities? Yes. Guys, please note. It's a very important question. Yes. What is underwriting?
Sir, underwriting means a guarantee to the company that its new shares or bonds will be sold. When a company issues IPO, FPO, or bonds, an investment bank promises it that if public doesn't buy all the securities, then we will buy the remaining unsold securities. And role of IB is that they guarantee the sales. They take the financial risk, which is most important, help in pricing, create demand, advise the company, and distribute the securities.
Okay. Very nice. Anyone else, guys? Hello? What is underwriting? Yes? Yes? Boss, all of you are clear on underwriting, yes?
Yes, sir.
Okay. Okay. Fine. Now next 20 questions. Guys, what we'll do is we'll take a short break here for 10 minutes. 10 minutes only, guys. Now 6 o'clock. So 6:10 we'll be back. But I want more active participation from other participants here. See, I'm telling you guys, this is very important for you. I've seen many students. They think they know everything, but actually at the time of interview they fumble tumble. Yes, that's how it happens. Because that I know everything will spoil you. Please note. So there is nothing like you know everything. Yes, you need to know many things because this is like a ocean. It evolves every time, and you need to have that articulation. That's more important. If somebody is coming to the interview and just reading definition, they'll be marked down because definition anybody can read, but articulation is very important. The way you explain things, yes, that's what is important. with examples, case studies. That's how you different from others. So guys, I'm telling you, I'm forewarning everybody here. If you are not actively participating, or neither, if you're not actively listening, then you're actively not noting down what is being discussed here. It will create problem for you later on. I'm telling you, I'm very straightforward. I don't mince word. I'm blunt to the point. If you are just reading definitions in the interview, it's not going to work out. You have to back up with a example, case study, articulation. That's what is important here. Yes, please note that. Okay, okay, fine, guys. 10 minutes break. Now it is 6:02. We'll catch up at 6:12. Okay.
Okay, sir.
Yeah.
తను అవుతుందా లేదా
Yeah, guys, has everybody joined back? Hello? Yes?
Yes, sir.
Okay. Okay. Hmm. Okay.
Yes, sir.
People are ready to join. Yes. Okay. Okay. Fine, guys. So these are the questions that we have. Now, any doubts here, guys? First, I'll take the doubts. Yes. Please note, you need to come up with the doubts. See, if you don't have doubts, that means that you are fully prepared. But if that is not the case, then you should be asking me doubts. Yes. Yeah. Yes. Guys, questions.
Sir, I have a doubt on cash equity and the product of cash equity.
Very good. Cash equities means ownership securities. Yes. You all aware of that. Yes. Cash equities means these equity products are available in the stock exchanges. Yes. Daily, if you want to buy, sell, where do you buy, sell? In the stock markets, yes, exchanges. And if you want to become owner of the security within few days, which market you should buy? Cash market or derivative market? Yes, Priyanka.
Cash market, sir.
Cash market means spot market. Yes.
Yes.
Yeah. So cash equities mean the equities which are available in the cash segment. Cash means you have to settle within 1 day or 2 day the trade. Is it clear?
Yes, sir.
It's called cash. So cash equities mean the equities which are available in the cash segment. Yes. What are products of cash equities? Common shares, preference shares, ADRs, GDRs. These are the products of cash equities. Yes. Yeah. You understood, Priyanka?
Yes, sir.
Okay. Next, guys. Yeah. Next.
So, difference between ADR and GDR.
Difference between ADR and GDR. Very good. So ADR full form is, what is full form of ADR? Is this Monisha? What is full form of ADR?
American Depository Receipts.
American Depository Receipts. What is the full form of GDR?
Global Depository Receipts.
Global Depository Receipts. Yes. These are the difference between ADR and GDR. Now, ADR is issued in the American markets. Yes. Who issue ADRs in American markets? Non-American companies. That means non-domestic companies. Non-American companies issue ADRs in American markets. So to issue ADR in American market, you need the regulatory permission of US regulatory body, Securities and Exchange Commission, and you need to take the help of US investment banks, and you need to take the permission from US stock exchanges to list the securities there, ADRs there is. So that's a ADR process. If you issue same process in other than America, say UK markets, it's called GDR, or European markets called GDR, or Singapore markets called GDR. ADR, GDR, both are same only, but only thing is place of issue. Since American market is very restricted and very strict market, so people started calling ADR separate, and other than ADR, everything is GDR. Is it clear? Product is same only, yes? Is it clear? Okay. Yeah. Next, guys, any other questions?
Sir,
Yes, Mahak.
sir, I want to ask what is premium reserve?
What is premium?
Premium Reserve.
Premium reserve.
Yes, sir.
See, share premium is there. Is if you issue shares at a premium, 10 rupees face value issue at say 110 rupees. What are you collecting? Share premium 100 rupees. Yes. Face value 10 rupees. But you're issuing the share at 110 rupees. So there's a premium of 100 rupees. That premium goes and sits in the reserves and surplus. Yes, that 10 rupees will go to share capital. The balance 100 rupees goes to share premium. Is it clear? Share premium is a part of reserves and surplus. So it is a premium reserve. Is it clear?
Yes, sir. Sir, but I want to know, sir, can company use that reserve money or not? And how and why it is done in a reserve, not in a company's profit account?
No, that's not a profit. No, that's a capital that you have received from the shareholders. Yes. Is it clear?
So can we use the premium reserve money for the company's action or not?
For the companies?
Companies' actions like for further projects or anything.
See, all
Corporate.
that money can use. There's nothing like there's no restriction on that money. That money can be used for your investment purpose, for your capital projects purpose, expansion purpose, diverse. You can use that money. There's no restriction on that money.
So, sir, why the face value money and premium money is kept in different accounts, not in the similar accounts?
So, share capital is a different component. Share premium is a different component. Yes. If you add to share capital, then number of shares will increase. Yes. Hello.
Yes, sir.
So you cannot add it to share capital. Share capital, whatever that number of shares. Suppose you issue 1 crore shares, 10 rupees face value for 110 rupees. How much money you get? How much money you get? 110 crores. Yes.
Yes, sir.
Now, when you account it in your balance sheet, 10 crores you take it as share capital. Balance 100 crores you take it as share premium. If you take it that 110 crores to share capital is 10 rupees face value. That means 11 crore shares you have to issue. But did you issue 11 crore shares? No, you have issued only 1 crore
No.
shares. Is it clear?
Yes, yes, sir.
So you cannot take it in share capital. You have to keep it in separate reserve. Yes, share premium.
Okay, sir.
And that money can be used for any purposes. Yes? You can use for expansion purpose, diversification purpose, repayment purpose. That is on the asset side. No, asset side you receive cash. What do you
Yes.
do with that cash? It is left to you. In the liability side, in the balance sheet liability side, you have share capital and reserves and surplus. Share capital amount will go to share capital. Reserve share premium will go to reserves and surplus. Is it clear?
Yes, sir.
Next, guys, any other questions? Hello? First, I'm asking you here. All of you are clear? Yeah?
Yes, sir.
Okay, fine. Because I'm telling you, there are so many people here, nobody is asking question. That's not going to help you. I'm telling you, if you have a doubt, it is your job to ask and get that doubt clarified. If you're keeping quiet, despite having a lot of doubts and challenges, that's a big mistake that you're doing. Yes? Okay. Yeah, any questions, guys? Okay, okay. Fine. So first question, what is secondary capital market? Classification of secondary capital markets. Pause. Can anyone? Hello? Guys, what is secondary capital markets? Hello? Hello? Guys? Pause. Can anyone? You're not aware? You should ask me the question. If you are knowing and you're not asking question and you're not explaining, that means should I continue this session or should I stop here? Yes?
Sir, secondary capital market is a market where already issued shares and bonds are bought and sold between investors. And its classification based on trading agreement exchange traded market,
Hmm.
OTC market, based on type of financial instruments, equity market, debt market,
Hmm.
and based on settlement method, spot market, derivative market,
Hmm.
and based on market structure, order
Hmm.
driven market, and code driven market.
Very good. Yeah, guys, anyone else? What is secondary capital market and classification of secondary markets? Yes.
So,
Hmm. Yeah,
so
Mahal.
secondary capital market is a market where existing securities are bought and sold. So here in this market, no further capital is raised. The existing capital is only buy and sold, and it provides the liquidity to the investors and also helps in price discovery. And the classification for the secondary market is stock exchange and OTC market.
Hmm. Very good. So, guys, secondary market means it's a trading between two investors. Yes, that's called secondary capital markets. Primary means where the company issues securities to the investors. It's an action between investors and issuers. But in secondary markets, an action between one investor and another investor. Yes. So secondary markets provides liquidity. Yes, liquidity to the securities. It also provides the price discovery, reduces search cost, all that activity. Yes, it's an activity where it takes place. Secondary markets are broadly classified into exchange markets and OTC markets. Exchange is a order driven market. OTC is a code driven market, yes, where the trading takes place. Exchange is a very regulated market, transparent market, yes. Is it clear? Then we have capital market products and instruments. Uh, Guys, what are capital market products and financial instruments we have?
It include equity, bond, debenture, preference share, mutual fund, ETF, and derivatives.
Very good. Anyone else? Guys, what are capital market products? We have
Equity product, debt product, hybrid product, then derivative product, which is future options, forward and swaps, depository receipts.
Hmm, very good. So equities include depository receipts as equity products, debt products as long-term debt instruments that comes under capital markets as equity, long-term debt, and hybrid products. These are the products which are part of your capital markets, and even derivatives on them is also part of capital markets. Derivatives on long-term equity and long-term debt and other products, it comes part of the capital market products. Yes, these are the financial instruments. Guys, can somebody can tell me what are cash equities and what are products of cash equities?
Sir, cash equity refer to stocks that are bought and sold with immediate settlement, that is T plus 1 day. And product include common shares, equity shares, preference shares, ETFs, and all.
Hmm, very good. Okay. So these are the products which are traded in the cash segment. That's why they are called cash equities. And the products are common shares, preference shares, ADRs, GDRs. They part of your cash equity products. Next, guys, what is common share or equity share or ordinary share? What are its features? What's benefits and risk involved in common shares? Hello, guys. What is common shares?
Sir, common shares are basic shares of a company that represent ownership. If we buy common share of a company, you become a part owner of that company.
Hmm.
And its features of common shares are like ownership rights, voting
Hmm.
rights, dividends not guaranteed. You may get dividend if
Hmm.
company decides to distribute profits, and limited liability and residual claim. If company closes down, common shareholders get paid last, and high return potential
Hmm.
and freely tradable. And
Be
benefits
transferable.
are
Be transferable.
yes, and benefits are high wealth creation potential,
Hmm.
dividend income, liquidity, voting power, and easy to buy and sell. And risks involved in this are dividends are not guaranteed, last priority in case of bankruptcy, company performance is also a risk, and no fixed returns, and market risk.
Very good. Guys, anyone else? Anyone else? What are common shares? This is very important topic, guys, because most of the interviewers will ask you what do you know about common shares and what do you know about their features and benefits and risk involved in common shares. Yes. Yeah, guys, anyone else?
So common shares are like it's like equity shares representing a ownership in a company.
Very good.
Like if you buy common shares, you become a part of that partly owner of that company.
Hmm. Hmm. Very good. So if you buy common shares, you become owner in the company, yes? Owner in the company. So thereby you get the benefits like voting rights, and you also may get benefit of dividend income. You also get benefit of capital gain, wealth creation possibility. These are the benefits, and the features it includes freely transferability and all other benefits also kind of features. And then common shares can be listed or can remain unlisted, and they are freely transferable. And common shares gives the ownership right in the company, thereby you get voting rights to elect the board of directors and elect the auditors and important business matters. And since you're a common shareholder, they are last claim holders on the company assets and earnings. They're not the first claim, residual claim holders, yes. And common shares do not have redemption. It's a permanent capital for the company. There is no redemption date for common shares. Yes. So common shares do not carry any redemption date. Yes. They are perpetual capital for the company. Yes. Yeah. Yeah. Guys, just 1 minute. There is 1 minute. Yes.
Okay, sir.
So common shares gives that features, benefits, and risk is you there's no guarantee of income, and you're a residual claim holder. That means you will be paid last in case the company goes liquidation. And there's a lot of price risk, volatility risk of the price in the markets. And there is a liquidity risk possibility. That means you may not be able to convert your shares into cash if the liquidity is very less in that counter. And there is a uh, yeah, liquidity risk, market risk, and you may also face currency risk in case you hold shares of foreign companies. And you also have issuer risk. Issuers can do frauds and can do mismanagement. All that can lead to big risk for the investors. Their value loss can happen because of that. Yes. Is it clear, guys? Common shares. Hello. Any questions in common shares? Okay. Can you please tell me, guys, what are preference shares, its features, benefits, risk, and types of preference shares? Hello?
Yes, sir.
So,
So,
yes, sir.
preference.
Yeah. Who else is
Yes, yes,
speaking?
sir. So, Monisha, but this
Monisha.
question goes.
Yeah, Monisha, you can carry on.
Thank you. So, preference shares is some security that gets some priority over the common shares. The preference shareholder, the preference shareholder got in preference over the common shareholders in the case of issuing a dividend. The features of preference shares are fixed dividend rate, but a preference shareholder will only get the fixed dividend rate, while the common shareholders will get the dividend after in not in fixed percentage. But a preference shareholder only get a dividend in a fixed percentage, and the preference shareholders have a limited voting right. And the types of preference shares might be participating and non-participating preference shares, where the shares are often the a possibility of additional dividend if the company profits exceeds the amount, and the non-participating preference shares means the dividend is limited to the fixed rate. And convertible preference shares and non-convertible preference shares. The convertible preference share will be converted after some time. The preference shares will be converted to a common shares after some time. But non-convertible preference shares will be fixed as an preference shares. It won't be converted as an common shares.
Good. Yes, Drishti.
Yes, sir. So preference share provide fixed dividend and have priority over equity share during liquidation. Then the benefits are dividend priority, fixed dividend, limited and no voting right, priority in liquidation. Then there are different types of preference share, like first on the basis of dividend, then that is cumulative preference share and non-cumulative. Then on the basis of conversion, it will be convertible and non-convertible. Then third, on the basis of participation, it would be participating and non-participating preference share. Then fourth, on the basis of redemption, it would be redeemable and irredeemable. Then fifth one is adjustable or floating rate preference share. Then sixth one is callable preference share. And if we talk about India, so in India, preference share can be issued for maximum 20 years. And there are certain disadvantage of preference share as well, that are limited voting right, lower potential return, interest rate sensitivity, non-participating in company growth. Then fourth one is call risk, then market price fluctuation.
Very good. So, guys, preference shares is a class of shares where these shareholders get preference over common shareholders, hence the name preference. They get preference in two cases, one at the time of dividend payment, one at the time of liquidation. So preference shareholders' dividends are paid first before any dividend is declared for common shareholders. And preference shareholders will be ahead of common shareholders at the time of liquidation proceeds distribution. But they are not on the top. Top will be secured creditors, secured bondholders, and government dues, employee dues. Those will be first. Then they are in the queue, but last but one. That's a preference shares. What is the benefit of buying preference share is you get fixed rate of dividend and you have a preference in two cases. That's why I mentioned that's the benefit. And preference shares also can be freely transferable. Yes, and the types, yes, we have based on the convertible, we have convertible and non-convertible. Based on the cumulative of the accumulation of dividend, we have cumulative, non-cumulative preference shares. Based on the callable, we have callable and non-callable preference shares. Based on the redemption, we have redeemable and irredeemable preference shares. Based on the participation in surplus profits, we have participating and non-participating preference shares. These are varieties of preference shares, and preference shares risk is they behave like a bonds. They are sensitive to the interest rates, and preference shares will also have market risk, and they also have liquidity risk. And 90% of preference shares, 90% companies don't issue preference shares. That 10% company who issue, they issue in a private placement. Most of them, 90% of them issued in private placement. Hardly you see listing of preference shares in the capital markets. Is it clear, guys? Yeah. Okay. Next, what is cumulative preference shares, guys? Hello.
Cumulative preference share are
Yes, Komal.
Yeah, cumulative preference share are shares where unpaid dividends accumulate and must be paid to shareholder in future before any dividend is paid to equity shareholders.
Very good. So accumulation, yes, Mohammad Anas Khan.
Sir, when we have cumulative preference share, Then we have this benefit, like if company can't pay our dividends this year, then it will remember it and we will get our dividends next year when company will have this profit. We will never lose our dividend.
So cumulative preference shares are those shares where the dividend gets cumulated, yes, and paid in the year of profits, yes. So that's a possibility of receiving missed dividends. Yes, that's called cumulative preference shares. Yeah. Next, guys, what is participating preference shares?
Sir, I want to ask a question.
Yeah, please ask.
Sir, is preference share is for individual or a big investor? Because you said that it is
Yeah,
basically
private placement, yes.
yeah.
So please note, this can be for individual investors and also can be institutional investors, yes. So there's nothing like individual investors cannot hold; they can hold, yes. Is it clear? ठीक है.
Sir, I also want to know कि sir is it a mix of equity and debt or just a equity?
It's a product of equity products, yes. They're kept under equity products, yes. But in a real sense, they are not real owners of the company, yes. But for a bondholders, whether behind you who are there, whether it's a preference shareholder or common shareholder, they don't matter, yes. Their ranking is high, yes. Is it clear? For debt holders, whether you are a preference shareholder or a common shareholder, for them both are you are same only because they are below in their ranking, yes. Is it clear? So that's why they club it under equity, yes. Is it clear?
Yes, sir. Sir, it says na it gets a fixed dividend rate, so like 8% per year. So I thought it would be like that, not equity.
No, it is not a debt. Why? Because there is no compulsory payment of 8%. Yes, it depends on the profitability of the company. Yes, if the company makes losses, there is no 8%. Yes, is it clear?
Yes.
Dividend. Yes, it is not a interest. Is it clear?
Yes, sir.
So that understanding you should have. Yes. Next, guys, what is participating preference shares? Hello?
Sir, participating preference shares is the one who holds this, the shareholder who holds the participating preference shares, they gets the additional dividend after paying the dividend to the common shareholder.
Very good.
Basically, if companies have the surplus profit, after it's paid to the common shareholder, on the rest of the profit, the participating preference shares gets the additional dividend.
Very good. So participating preference shareholders gets additional surplus participation in the surplus profits of the company. If the company reach certain level of profits, beyond that they get some share in that profits. Yes, that's called participating preference shares. Very good. Next, guys, what are depository receipts and types of depository receipts? Yes. First, what are depository receipts and types of depository receipts? Yes. Hello? Okay.
Sir,
Yes.
so depository receipts are like tickets that allow people in one country to purchase shares of a company from another country without having to go that foreign stock market. Like for example, if I want to invest in Apple, normally I would have to open an account in US stock market. But by this depository receipts, a bank in US collects Apple shares and gives an Indian bank same receipts that represent those shares. So now I can purchase those receipts and it's same as owning Apple shares. And types are ADR and GDR, American Depository Receipts and Global Depository Receipts.
Very good. Okay. So a depository receipt is a negotiable instrument. It's a certificate which represents a ownership in a foreign company. Yes. So ownership in a foreign company. You need not to hold directly foreign company shares. You can hold ADRs or GDRs, which represents a ownership in a foreign company. Is it clear, guys? Yeah. Mm. Yeah. Guys, all of you
Yes.
understood what are ADRs? What are DRs and types of DRs? Yes. So what is DR? A negotiable instrument which represents a ownership in a foreign company stock, foreign company share. Yes. Hmm. Okay. Next. What is ADR? Its features, benefits for the issuer, and benefits for the investors. Yes.
ADR is a way for non-US companies to sell their shares in American investors.
Hmm.
So its benefits are like easy access to foreign companies,
Hmm.
bought and sold just like US stock in US market hours. Dividends are paid in USD. No need for international brokerage account. Those are benefits of ADR.
Hmm. Very good. So, guys, ADRs are American Depository Receipts, which represents a ownership in a non-American companies. Yes, it's a negotiable instrument traded in the American stock exchanges like New York Stock Exchange and Nasdaq Stock Exchange. It's a method of raising capital in US capital markets by non-American companies. And what is the advantage for the issuers? They can access the biggest capital market in the world, that's US capital markets, and they can raise capital in foreign currency, that is in dollars, and they can price their securities at a relatively higher price comparatively to their market prices in the local markets, and they get the diverse ownership of securities with different investors holding them as. And what is the benefit for the investors? They get access to the non-American company ownership through ADR, and their ADRs are traded in their own currency and their own markets like a Nasdaq and New York Stock Exchange. They need not to convert their currency into foreign currency, and they need not to go to that regulatory hassles of getting registration with that local regulators of that company. That all benefits to the investors. Yes. Is it clear, guys? Hello? Hmm. Guys, can anyone find out the list of companies which have gone for ADR issue from India? Yes.
Yes.
Wipro,
Infosys, ICICI.
Wipro, HDFC Bank,
Uh, Very good.
MMT, WN,
So these are
Tata
the
Motors.
Tata Motors. Yes. Wipro, TCS, HDFC Bank, ICICI Bank, Infosys. Yeah, these are some of the companies which have gone for ADR issue. Yes. Hmm. Okay. Now it's okay. Hmm. Next, guys, what is GDR and how it is different from ADRs? Hello, guys, what is GDR and how
So
it is different from
GDR
ADR?
is global. So GDR is global depository receipt that allow company to raise fund in multiple international market, not only in America. So the difference between ADR and GDR is ADR trade only in US and GDR trades globally.
Hmm. Very good. So the GDR and ADR only difference is the place of issue. Yes, ADRs are issued in America. GDRs are issued other than America. Yes, ADRs are priced in dollars. GDRs can be priced in dollars, pounds, euros, and all that. Yes. Yeah. Hmm. Okay. Hmm. Okay. Hmm. Next, guys, let's look at these questions 34 to bonds. Yeah. Boss, any questions here? Please go through. I'll give you 2 minutes. Yeah, guys. Any questions on this?
Sir, what is junk bond?
Very good. Junk bonds are those bonds which are issued by low-rated companies. Those are having significantly higher credit risk. The rating is very low, below triple B minus. Any company whose rating is below triple B minus and below is called below triple B minus. Something like double B plus, double B minus, triple C plus, triple C minus, double C plus, double C minus, C plus, C minus. All that comes to the junk category. Yes, junk means high risk. High risk bonds, yes, but they also have higher yields. The rate of interest or yield on that bond will be high. That's called junk bonds. Yes, is it clear?
Yes, sir.
They're also called as high yield bonds, the bonds which carry significantly higher yields. Because there's an element of higher risk, there's a higher yield. Next, guys.
Sir,
Hello?
clean price and dirty price.
Very good question. So clean price is the market price of the bond. Bonds are traded in the market at clean price. It does not include accrued interest. Whereas dirty price is equal to clean price plus accrued interest. Bonds are traded at clean price, settled at dirty price. So the market price is called clean price. When they settle the trade, they have to pay, the buyer has to pay clean price plus accrued interest. That's called buyer has to pay dirty price. You clear? Yeah? Hello?
Yes, sir.
Now tell me why buyer has to pay dirty price? Why they have to pay accrued interest? Yes? Why they have to pay accrued interest?
Because the seller was holding the bond for long time.
Since last coupon payment date till the time the buyer is holding the bond, hence they need to be compensated. Yes, the seller was holding the bond, so hence the buyer need to keep compensating the seller of the bond. Yes, is it clear for that interest duration? Yes, because the buyer will receive the next coupon, full coupon he will receive from the issuer. Yes, is it clear? Guys, did you understand this flow? Hello? Yeah? Next question. Next question.
Sir, what are the hybrid securities? The purpose.
Hybrid securities are nothing but convertible bonds. These are nothing but convertible bonds, yes, which are basically the bonds which can be converted into common shares. So it's called hybrid security. It has got element of debt and equity, yes. So it will behave like a equity when the equity price starts rising, yes. It behave like a bond if the equity price falls. Is it clear? Hello?
Yes, sir.
It's called hybrid securities. Convertible bonds, yes. Yeah.
Okay. Yes, sir.
Why do companies issue convertible bonds? When they want to pay lower coupon on the bonds, they'll go for a convertible bond because the investor get the conversion option. So they can issue the bond at a lower coupon rate. Suppose the normal coupon rate on the bond is say 15%, but they will pay only 10%. Why less than 15%? Because this bond is having conversion option, conversion into common share. Is it clear?
Yes, sir.
Okay. Next, guys. Hello? Was any other questions? I'm asking you, please note it is your learning. And I think next week they will schedule the mocks, yes? Yeah? Next week, or you want 1 week time for preparation, guys?
We
Hello?
want one time preparation, party preparation.
You want 1
So
week
1
time
week
for
time.
preparation? Okay. Okay, then I'll check with Giri and then let you know, guys. So let's see what best can be done. Yes. So, any other questions here? Okay. Okay. Can somebody answer what are bonds? Features, benefits, risk. Hello? Guys, what are bonds? Yeah.
Sir,
Yes.
bonds are fixed.
Yeah, Drishti, carry on.
Yeah, Komal, you can.
Okay. So bond is a fixed income security that represent a loan made by investor to borrower.
Very good.
So there are some features of bond like fixed interest. You get a fixed percentage as interest every year.
Mm.
Bonds are for fixed time like 3 years, 5 years, 10 years. Or you can sell your bond before maturity if you want money early. There are some benefits of bond like a regular income, interest is paid yearly or semi-annually.
Mm.
And bonds are less risky because interest is paid fixed.
Mm. Very good. Yeah. Guys, anyone else? Yes, Tristi? Hello?
Yes, sir. So bonds are fixed income instrument where investor lend money to the issuer and receive interest. So the features of bond will include fixed coupon, maturity date, and tradability. Then benefit will include stable income and lower risk than equity. Then the risk, two major risk will include interest rate risk and credit or default risk.
Mm. Okay. Okay. So guys, you need to understand that bonds are fixed income securities, which represents debt acknowledgement by the issuer, and it's a loan extended by the investor to the issuer company. Yeah, issuer says it's a bond says, and bonds will have all the features like it's a debt instrument. First, it's a debt security. It's a creditorship security. It generally carries coupon rate. So it's an interest income security. It's a fixed income. Yes, generally fixed rate bonds will have fixed income nature. So you get the fixed income from the investment in bonds. And bonds are creditorship securities, and bond repayments are very structured, and it's not linked to the profitability of the company. Yes, that's the benefit of bonds. Bonds can be liquid, yes, can be tradable in the stock exchanges, and bonds are freely transferable as a part of it. So these are some of the features of bonds. Yes, so bonds will have face value. Yes, and bonds will have coupon rate. Bonds will have issue date, issue price, redemption date, redemption price, and bonds may have additional features like callable feature, puttable feature, convertible features. These are special features can be there in the bonds as a part of it. So you need to understand the bond terminology, yes, as a part of that. And then risk is you will have a lot of risk in the bonds as well. So we have interest rate risk, we have liquidity risk, we have sovereign risk, we have purchasing power risk or inflation risk, and then we also have the currency risk in case of foreign currency bonds, and there's a reinvestment risk, there's a prepayment risk. So all that risk is involved, or callable risk. Yes. So all these are risk involved in the bond investments as a part of it. Yes. Yeah. Guys, any questions on the bonds? All of you are clear of the bond? Okay. Okay. What are types of bonds, guys? What are different types of bonds we have? Hello? Guys.
Sir, local bonds and foreign bonds.
Yeah. What are types of bonds we have?
Government bond, treasury bond, corporate bond. Then
Very good. Based on the issuer, we have based on the issuer, we have corporate bonds, government bonds, municipal bonds, SPV bonds. Yes. Based on the issuer. Based on the redemption, redeemable bonds and irredeemable bonds. Yes. Based on the callable bonds, non-callable bonds.
non-callable bonds.
Based on the puttable feature, we have puttable bonds and non-puttable bonds. Based on the conversion feature, we have convertible bonds and non-convertible bonds. Based on the coupon rate, we have fixed coupon bonds,
And
floating coupon bonds.
Zero.
We have zero coupon bonds. We have step up coupon bonds, step down coupon bonds, based on the coupon basis. Yes. Then based on the place of issue, we have domestic bonds, we have foreign bonds, we have global bonds. Yes, foreign bonds are issued in a particular foreign country in particular foreign currency. In global bonds are issued in multiple countries in a foreign currency. Yes, it's called global bonds. Yes, is it clear, guys?
Yes,
Hello.
sir.
Any questions?
No, sir.
All clear? Yes.
Yes,
Okay.
sir.
Okay. Next, we have discussed junk bond. What is zero coupon bond, guys? And why do companies go for zero coupon bonds issue?
So
Yes.
generally, zero coupon bonds doesn't issue any, sorry, that doesn't provide any cash flow of interest, but they are issued on the deep discount bonds, sir.
So
For example,
zero.
if a bond face value is 1,000 rupees, and if, the bond will be issued on the deep discount like as a face, 600 rupees of bond value. At the time of settlement, they will get a 1,000 rupees of bond values.
So zero coupon bonds are those bonds which are issued at a deep discount to the issuer, does not discount to the investor, does not include any payments of coupons because it's a zero coupon. Yes. And these are called deep discount bonds. And why do companies go for deep discount bonds issue or zero coupon bonds issue is they don't want to pay interest. So if the company's cash flow does not provide them an opportunity to pay regular interest, they will go for a zero coupon bonds issue. Yes. Okay. Guys, what are euro bonds? Hello? Boss, what are euro bonds? This is what the challenge is. Yeah. What is euro bond? Boss, I'm asking all of you here.
Sir, euro bonds are bond issue outside the country in a currency different from the issuer home currency. And they help company access global investors.
Very good. So zero coupon bonds are issued in a particular country currency, but not in that country, outside that country. Suppose you are raising US dollars, not in US, outside the US. Yes. It's called euro bond. Yes. Euro US dollar bond. Euro US dollar bond. Yes. Is it clear? Suppose you are raising GBP, pound currency, not in Britain, outside Britain. It's called Euro GBP bond. Suppose you're raising Japanese yen, not in Japan, outside Japan, then it's called Euro Japanese yen bond. Is it clear, guys? Suppose you're raising Euro currency, not in Europe, outside Europe, then it's called Euro bond. Yes, is it clear, guys? Okay. Can somebody tell me, guys, what is the difference between floating rate bonds and fixed coupon bonds? Hello?
Yeah. So fixed coupon bonds pay the same interest always. Like if it is pays 8%, it will always pay 8%. And floating rate bonds change interest depending on market rates. If rates go down, interest rate also decreases.
So floating rate bonds and fixed coupon bonds. Yes. Floating rate coupon keeps on changing because the rate of interest is linked to some external benchmark which keeps on changing. Yes. So it's called floating rate coupon bonds. Fixed coupon means the coupon is fixed during the entire life of the bond. That means the investor will get the same coupon during the entire life of the bond. That's called fixed coupon bonds. Yes, as a part of it. Guys, next. What is convertible bond? What is fully convertible and partially convertible bonds?
So convertible bond is after a certain period of time, the bonds will be converted into one shares of the company, and fully convertible bonds is something like the full bonds will be converted into one share, And partially convertible bonds is the part of some part of bonds will be converted into shares, and the remaining will be stay as a bond.
Hmm. Okay, very good. Why do companies go for convertible bonds issue? Yes.
Probably when they want to give lower interest.
When they want to raise capital at a lower rate of interest, then they will go for the the convertible bonds, and they want equity also. So basically, the conversion can lead to convert into equity also. Yes, so they want to pay lower coupon, but there could be possibility of conversion of that bond into common shares. So thereby they get the equity also. Yes, is a part of it. Okay. Next, guys, what is difference between clean price and dirty price?
Sir, and what does that mean, partially convertible bonds mean, sir?
Partially convertible bonds means these bonds, suppose a $1,000 bond, 500 is converted into common share, 500 will continue as a bond. That's called partially convertible bonds. Yes, fully means entire $1,000 will be converted into common shares. Is it clear?
Okay, sir.
Okay. Next, guys, what is clean price and what is dirty price? Hello? Boss, I'm asking all of you, what is clean price, what is dirty price?
Sir, clean price is the bond issued price without adding any accrued interest.
Hello,
But
Priyanka, it's not issue price.
It's a market price, sir.
It's a market price of the bond. Yes, it's a market price of the bond. Yes. Go ahead, Priyanka.
Yeah, it's a market price, but the dirty price, the difference is including the interest that is accrued on that particular bond.
So dirty price means it is dirty. Dirty with what? With accrued interest. Yes, the bond gets dirty with accrued interest. So added some dust on the bond. What is that dust? Interest. Yes. Let's say clean plus dust. What is dust? That interest that is need to be added to that bond, because the seller of the bond was holding the bond since last coupon payment date, and he need to be compensated for the holding period since last coupon payment date till the date of sale of the bond. So he gets added to the clean price, and that is paid by the buyer. So bonds are traded at clean price, settled at dirty price. Is it clear? Okay. Next, what is the relationship between market interest rates and bond prices? Yes.
So it's a vice versa relationship, sir. When the market prices are goes up, bond prices come down. When it comes to market prices are come down, the market bond prices are goes up, sir.
Okay. So bonds are inversely, the bond prices are inversely related to the interest rates. Yes. Whenever the interest rates rises, what will happen to bond prices?
Bond price come down, sir.
Bond prices falls. Yes. Yeah. If the interest rates falls,
Bond prices increase, sir.
bond price increases. Yes. Very good. Next, guys, I think we discussed this hybrid securities. Next, let's move. Guys, have a look at this. Then I'll discuss. Yes, I'll give you 2 minutes. Okay. Guys, any questions on this?
Yes, sir. Sir, I have one doubt.
Hmm.
Sir, repo rate and repo transaction are two different things, right?
Obviously, they are not. See, repo transaction will have a repo rate. Yes. Is it clear?
Okay.
Repo is done at a particular rate of interest. Yes.
Okay.
That will not be explicit as a rate of interest. That will be calculated in the repurchase price. Yes. Is it clear?
Okay. Okay, sir.
So, repo rate is a part of repo transaction. Yes. Is it clear?
Repo transaction is repurchase agreement and repo rate is that of RBI one, right?
Oh, very good. So, repo rate, what you are saying is RBI repo rate, yes?
Yes, sir.
RBI,
I'm asking that because I got confused between
no.
repo, that's why.
That RBI repo rate is also for RBI repo transactions. The transactions can happen with the RBI also, yes? So, what is
Okay.
repo with the RBI means? Banks will sell securities to the RBI and
Hmm.
RBI gives them cash, yes? Is it clear?
Okay. Yes.
Yeah. So they give them cash. When they repurchase the same securities from RBI, they need to pay extra cash to the RBI. That extra cash will be repo rate. Is it clear?
Okay.
Hello?
Yes, sir.
That extra rate is what is today's rate as per RBI repo rate? How much is the repo rate, guys? As on today?
5.5, sir.
5.5% per annum. Hello, that rate is 5.5% per annum. The number of days that you have done the repo, accordingly, the interest will be added to the repurchase price. Is it clear? Hello?
Yes, sir.
So you need to understand this, yes? Okay. So that's what is repo. Repo rate means interest rate. What is the RBI repo rate? 5.5%. Yes. What is the market repo rate? What is market repo rate? It will not be 5.5%, it will be a little bit higher. Why? Because it is a transaction between two private parties. Yes, they may not negotiate at 5.5%. They may negotiate at a 5.65 or 5.75. Different depends on the market conditions and all that. Is it clear? Hello?
Yes, sir.
Is it clear, guys? Okay. Next. Any other questions? Yes.
Sir, and one more question, sir. Treasury bills are issued by two types, like sir, a uniform pricing method and the multiple pricing method. So
Yeah.
I'm not getting there to how they will issue.
Oh no. When the central bank issues, government issues treasury bills, the government will say that all treasury bills will be issued at a uniform price. Uniform price means that bidding will happen, but everybody will get that uniform price. That means whether you bid more, you bid less, and all that, as long as your bid price is near that cutoff price and above, you will be given that cutoff price only. Is it clear? That's called
Okay.
uniform price. Multiple price means whoever bidded at highest price, they get that bidding price. Suppose you bid at 98 rupees for treasury bill, you will be allotted at 98. The other person has bidded at 97.95. He'll be allotted at 97.95. And the other person has bidded at 97 say 90. He'll be allotted 97.90. The other person has bidded 97.80. He'll be allotted 97.80. So until they finish that entire quantity of issue, they will give that multiple prices. Is it clear? Based on the highest bidders.
Okay.
Yeah. Uniform means everybody will get the same price. Yeah. Is it clear?
Okay, sir.
Okay. Any other questions, guys? Okay. Now, guys, what are money markets? Features, benefits, risk involved in money market instruments. Hello? Guys, what are money markets? First, I'm asking all of you here. Yeah. Guys, same question will come in interview process.
Sir, a money market is a part of financial market where short-term borrowing and lending takes place.
Hmm.
It, and it is used by banks, companies, and governments to manage short-term cash needs.
Hmm.
And tenure is less than 1 year.
Hmm.
And features are it's short-term, highly liquid, with
Hmm.
low risk, and helps in short-term financing.
Hmm.
And benefits of money market is it's a safe place to park money, and
Hmm.
it's highly liquid, helps
Hmm.
manage short-term funds, provides stable returns, and
Hmm.
supports economic stability.
Hmm.
And risks are interest rate risks, liquidity risks, and credit risk.
Hmm. Very good. Guys, anyone else? Pause. Anyone else? Okay. So money markets are basically the markets where short-term funds are borrowed and lent, but mostly it is done through securities also, through the instruments like treasury bills, commercial paper, certificate of deposits, commercial bills of exchange, bankers' acceptance. Yes, those instruments are used in raising capital by various participants in the markets, and it's an investment avenue for investors for short term, highly liquid, relatively high safety, and these instruments are high denomination instruments, and mostly institutional investors and other investors participate in this money market instruments, yes, money market products, yes, is a part of it, yes. Okay. And risk is like bond risk, even money market instruments also have similar risks like interest rate risk, yes, inflation risk, and sovereign risk. All that will be there as purchasing power risk, and liquidity risk is very less because they are highly liquid instruments. And credit risk will be there in case of non-government issued instruments as a part of that, yes. Okay. Uh, Guys, what is different between money markets and capital markets? Hello? What is different between money markets and capital markets?
Can I go?
Yes, go ahead.
So money.
Mahima, you're not audible. Hello? Mahima? I think
I'm
this.
audible right now?
Right now you're audible. Yes.
Yes, sir. I'm audible.
Yeah, yes. There's some technical challenges at her end. Yes. Guys, anyone else? Hello?
Yes, sir.
Yes, Komal.
So money market is deals with short-term fund that is less than 1 year, and capital market deals with long-term fund that is more than 1 year. The purpose of money market is used for short-term borrowing and liquidity needs, and in capital used to raise long-term finance for growth and expansion. Risk in money market is low as compared to capital market. In capital market, risk is high. Return in money market is low return, and in capital it is high. So instruments for money market is treasury bills, commercial paper, call money, and in capital it is shares, bonds, mutual fund, IPOs.
Okay. Okay. So, good. Mahima, are you there? Mahima. Mahima Chaudhary. Okay. ठीक है. Fine. Guys, next, what are the money market products we have? What are money market instruments and products?
So
Sir,
I'm
money
having
market
some
is
audio issue. Sorry.
Yeah, go ahead, Mahima.
No, she can go, sir.
Hmm. Okay. Komal, go ahead.
Okay, so treasury bills, commercial paper, certificate of deposit, call money, repurchase agreement. These are all money market products.
Okay. Very
Yeah,
good.
so treasury bills, it is issued by government. Commercial paper issued by large companies to borrow short-term money. Certificate of deposit, it is issued by bank like fixed deposit, but for short term. And repurchase agreement, one party sells securities and agree to buy them back later at higher price.
Very good. Yeah. Guys, what is treasury bill? What are the tenure of treasury bill? Features, benefits? Yes? Hello? What is treasury bill?
Sir, treasury bill are short-term government security with no coupon that are generally issued at a discount, and its tenure can be 91 days, 182 days, or 364 days. The benefits are it's the safest investment and generally have higher liquidity as they are government securities. Then its risk is that they generally provide low return as compared to other type of instrument, money market instrument. Then here we can take example like we will buy at 98 and redeem it at rupees 100.
Very good. So guys, treasury bills can be tenure as low as 14-day treasury bill, also 28-day treasury bill, but mostly popular is 91 days and 182 days and 364 days or 365 days treasury bill. Yes. Okay. And these are issued by the government. Yes. So they are safest instrument and they are high liquid instruments. Somebody wants to earn money safely without much risk, they should invest in treasury bill. Yes. Next, guys, what is commercial paper? Who issues them? What is the purpose of issuing commercial papers? What are the features, benefits, tenure? Hello?
Sir, commercial paper is an unsecured short-term promissory note that is issued by corporates. Then the tenure is 7 days to 1 year, and benefits are higher return than treasury bills, and the risk is credit or default risk.
Very good. So commercial papers are issued by corporate companies to raise working capital purposes. To raise working capital purpose, they issue the commercial papers, and these are unsecured promissory notes, short-term tenure, less than 365 days. It can be as low as 7 days to 365 days. And the denomination size of each commercial paper will be something like $1 lakh or 5 lakhs rupees in India. Yes, and benefits of investing in commercial papers is they are issued by top-rated companies and highly liquid, and they are they yield better returns than the treasury bills. Yes, you get a higher yield compared to treasury bill because there is a risk of default and all that. Yes, there is interest rate risk, default risk, all bond risk related also will be applicable to commercial papers. The only thing is bonds are long term, commercial papers are short term. Is it clear, guys? Hello? Did you all understood what is commercial paper? Yes? Okay. Next, what is certificate of deposit, guys? Who issues them? What is the tenure, features, benefits, risk? Yes? Hello? Guys, what is certificate of deposits? Pause, I'm asking everyone here.
Sir, certificate of deposit are time deposit issued by bank at a fixed interest rate. The tenure is of 7 days to 1 year for bank, and benefits are higher interest rate than saving account and low risk at the same time. Then risk can be penalty on permanent withdrawal.
Penalty will not be there in certificate of deposit. Yes. The risk is all the bond related risk also applicable to certificate deposit. Yes. This is as good as a bond instrument issued by bank. Yes. It's a short term. Yes. All the risk related to the bonds will also be applicable to these instruments. Yes. Interest rate risk, credit risk, inflation risk, all that will be there yes, as a part of it. Okay. So certificate of deposits are issued by whom? By
It is issued by, let's say, commercial banks.
Banks.
issued by banks, commercial banks. Commercial papers are issued by
Corporates.
corporate companies.
Corporates.
Bills are issued by treasury bills are issued by
Government.
Government.
so you need to understand that. So each of them different instruments are issued as all these are money market instruments as Okay. Guys, next, what is bankers acceptance? Hello? What is bankers acceptance? Boss, what is bankers acceptance? Yes.
Bankers acceptance
Sir,
is
it
a
is a
short-term debt
short-term
instrument.
instrument, short-term debt instrument. So when bank guarantees a bill of exchange,
Yeah. So banker's acceptance is a bill of exchange accepted by the banker for the payment is. So it's a backup with a commercial transaction. The seller draws a bill of exchange on the buyer, but it gets on the buyer's banker. So buyer's bankers accept the bill of exchange. Yes. Next, what is repo transaction, guys? What is the purpose of doing repo transactions? Hello?
It is agreement, short-term agreement where one party sells securities to another party and agrees to buy them back later at a higher price. For example, if a bank need money for 2 days, then it sell securities to bank B, and after that bank A agrees to repurchase them at a higher price.
So good. So repurchase means repo means repurchase obligation is repurchase obligation agreement. So where the seller, it's a method of raising cash. Yes, it's a method of raising short-term cash from another party by selling the securities with a commitment to repurchase the same securities at a later date at a higher price. Now this repo can be done in the market repo or central bank conducted repo transactions. Yes. Okay. Yeah. Okay. So what is the purpose of doing repo transaction? Guys, what is the purpose of doing repo transaction?
To raise short-term fund for operations.
To raise short-term funds. Yes, it's a method of financing. Yes. So in the to do repo transaction, what you should have? Yes. What you should have?
Securities.
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 Without securities, you cannot do repo transaction. Yes. What are types of repo we have? Guys, what are types of repo we have?
Market type, central bank repo.
Market repo and central bank conducted repo. What is the other types? We have open repo, term repo. Open means the tenure of the repo is not fixed. It keeps rolling every day. Yes, until the money, the borrower, the lender wants to take back their money. It's open repo, and every day they negotiate a new rate of interest for that day. Yes, it's added to the repurchase price. Yes, it's called open repo. Term repo means it is for a fixed term, maybe 3 days or maybe 1 week or 15 days or 1 month repo. Yes, that's called term repo. Is it clear, guys? And the other classification is market repo and central bank conducted repo. Is it clear? Yeah.
Yes, sir.
Hello? Hmm. Next, what is reverse repo, guys? What is reverse repo? Hmm. What is reverse repo, guys? Hello? First, I'm asking everyone here. Yeah?
So reverse repo is opposite of repo transactions. For example, in a repo, a bank borrows money and gives securities as collateral.
Hmm.
It's money and takes securities as a collateral.
Hmm. In reverse repo?
Bank lends money and takes securities as collateral.
So, boss, repo, reverse repo are two sides of same coin. Yes. For a person who wants finance, for them it is a repo. For the person who wants to invest that money, lends funds, it is a reverse repo. So in reverse repo, what do? You purchase securities and pay cash with a commitment to resell the same securities at a later date at a higher price. Is it clear? So two sides of same coin. For a borrower, it is a repo transaction. For a lender, it is a reverse repo transaction. Is it clear? Hello?
Yes, sir.
Okay. Okay. Next, guys. Now let's look at the derivatives. Boss, these questions, you go through these questions. We'll discuss this. Yes. I'll give you 2 minutes. If you have any questions, please ask. If you have any questions, please ask. Okay. Yeah, guys, any questions here? Boss, this is the most important topic is derivatives only. Most of the interviewers will test your derivatives knowledge. Yes. Yeah.
Sir, what is long forward strategy and short forward strategy? Can you explain once again?
Very good. I'll explain. Anyone has got any other questions about long forward, short forward?
Same question, sir, about
Same
long
question.
forward and
Okay.
short forward strategy.
Anyone has got any other questions which is above long forward, short forward?
Sir, OTC call option.
OTC call option is a below that, yes. It's not above that, yes. Anyone else, guys?
So the different margin collected in future contract positions.
That is also below that, yes.
Sir, payoff structure of future contract.
Very good. That's also below that long forward, short forward strategy below that. I'm asking anything above that, yes. Above is 62 question. Do you have any questions related to 56, 57, 58, 59, 60, 61?
So a broad category of derivative classification.
So derivatives are broadly classified into two categories: OTC derivatives and exchange traded derivatives. Is it clear, Mohammed?
Yes,
OTC
yes.
exchange traded derivatives. Okay. Any other question, guys? Can anyone explain me what is different between OTC derivatives and exchange traded derivative markets? Hello?
OTC derivative is a customized contract between the two counterparties, whereas exchange is a standardized contract.
Very good.
And in OTC, we have a counterparty default risk. But in exchange, there is no counterparty default risk because every trade is settled by the exchange.
Very good. Hmm.
And in OTC,
And
we have a liquidity risk as well.
Hmm.
In exchange, we don't have a liquidity risk.
Hmm.
Yes, sir.
Very good.
And in OTC, counterparties are known to each other, but in exchange traded counterparties are not known to each other.
Very good. Very nice. So, guys,
And in OTC market, prices are not publicly available, but in exchange, prices and trading info are publicly available.
very good, because it happens in the open market, yes, in exchange market where the prices are live. Anybody can see what prices are happening. But in OTC, it's a private contract between two counterparties. So it's very difficult to get all the relevant information. Even the information is out, still you will not be able to get the transparency, yes, in the instruments, yes. Okay. Okay. Good, guys. So I hope all of you got through this understanding of OTC and exchange traded debt. This understanding is very, very important, because you need to know why there's a difference first of all. Yes, that understanding you should have. Yes. Mm. Very good. So that's the difference between OTC and exchange traded. OTC is a privately negotiated bilateral contract, but exchange traded is it's in a trading platform provided by the exchange. It's anonymous trading between two unknown counterparties in the exchange markets. OTC is more customized, or exchange is very standardized. And in OTC, you have counterparty credit risk. In exchange, there is no counterparty credit risk, because all exchange trades are settled through clearinghouse. And OTC, you have liquidity risk, but in exchange traded, the liquidity risk is very less compared to that. And in OTC, we have products forwards, OTC options, and swaps. In exchange, we have products, futures, and options. Yes, that's the difference between OTC and exchange traded products. Yes. Okay. Uh, Guys, can someone explain me what are types of derivatives we have based on the markets where they are traded? Hello?
Exchange traded derivatives and OTC.
What are the types of derivatives we have in each of these markets?
Sir, we
We have
have
the
mostly
forward.
like OTC derivative markets and exchange derivative markets. And when it comes to OTC derivative markets, products like forward options and swaps. And in exchange, we can see like futures, option, and these are the products we can see in the derivative markets.
Very good. So you are aware, yes, in forwards and swaps and options are OTC options are in the OTC derivatives, and futures and options, listed options are in the exchange rate. These are the derivative products. Okay. I hope all of you understood this types of derivatives traded in each of the markets. Yes. What is forward contract, guys? Can someone explain me what is forward contract, its features, its payoff structure, its application? Yeah, guys. Hello. What is forward contracts?
Forward contract is a private agreement between two parties to buy or sell an asset at a specific price, but on future date.
Very good. So forward contract is a contract between two counterparties. It's a privately negotiated contract wherein all the terms and conditions of the trade are agreed on the trade date, but the settlement of that contract will be done at a agreed future date. In forward contract, the buyer is obligated to buy the underlying asset and the seller is obligated to sell the underlying asset at the forward contract price on settlement date. Yes, that's called forward contract. Yes. What are its features? Yes. What is features?
Sir,
Now just
Parties
go.
already decide quantity, price, and delivery date.
It's a customized contract. It's a OTC contract. Yes, where the counterparties are known to each other. It's a customized. It's a. It's having counterparty credit risk. Yes, default risk, and it has liquidity risk. Yes, but the benefit is customization. Yes, you can customize the contracts. Yes.
Also, the price can be locked on the trade date. So,
Yeah, that's what the beauty of forward contract is. The very purpose of forward contract is you can lock the prices, lock the quantity, lock the price, lock the settlement date in advance, and then go for the settlement on the settlement date. So it's a forward contract. Yes. Next, guys. What is long forward strategy? Long means buying the forward contract. Yes, that's called long. Long means always buy. What are you buying here? Forward contract. When you buy forward contract, you should be you are bullish on the underlying asset. Yes, that's why you want to go for long. Yes, when you will go long strategy, when you are expecting the prices to rise, that's where you rise this strategy. And what is the strategy payoff? You may have unlimited profits and unlimited loss. Yes, is it clear? Guys, that's the payoff structure in the long forward. Long forward means buying forward contract. When you will buy forward contract, when you are bullish about the underlying asset, yes, that's where you buy the forward contract. Short forward means you sell the forward contract. When you will sell the forward contract, when you are bearish on the underlying asset and you expect the prices to fall. Yes. And what is your payoff? Again, unlimited profits and unlimited losses. Is it clear, guys? Hello? Guys?
Yes, sir.
Yes,
so that's
sir.
the forward contract. Yes. Futures contract. What is different in forward future? Only difference is the platform. Platform in case of futures is exchange, and exchange products are all standardized. And there's no counterparty risk. It's a liquid contract. Any day you can enter, any day you can exit. It attracts margins. What margins? Initial margins and mark to market margins. But in forwards, there will be margins. Don't say there is no margins, but it's customized margins. And how they exchange margins and how frequently they exchange, it's all left to the counterparties. But in futures, everything is determined, everything is standardized by the exchange. Is it clear, guys? Hello? Forward, futures, both are same. Only difference is the platform difference. Is it clear?
Yes,
Guys?
yes, sir.
Yes, sir.
So, what is mean by long futures? When you will do long futures? When you will do long forwards? When you will do long forward?
Bullish view.
Bullish view. When you will do long futures, boss, forward futures are same only, same contracts. When you will do long futures, again when you are
Bullish.
bullish view. And what is the payoff structure in long forward? Unlimited losses, unlimited
Unlimited
profits.
profits.
Now what is the payoff structure in futures? Same.
Unlimited profit, unlimited.
Unlimited profits, unlimited losses. So both the things are same. Forward, future, both are same only. Only thing is the platform difference. Is it clear, guys? Hello? Now
Yes,
tell
sir.
me, when you will do short futures, when you will do short futures, when you are
Bearish.
bearish, when you will do short forward,
Same
when
bearish.
you are bearish, same only, boss, the same only. So you are just get confused, that's all, because the product is same, the payoff structure is same, the view can be exploited by using forwards or can be exploited by using futures. But if you go to futures, you have to listen to the exchange. You go to the forward, you can decide the contracts. Is it clear? Hello? Priyanka.
Yes, sir. Clear.
Yes, sir.
So long forward, long futures, both are same. Long short forward, short futures, both are same. In short forward, you do it in the OTC market with the counterparty. Short futures, you go to the exchange and do the short futures. Is it clear? Hello? Both are same.
Yes, sir. Yes, sir.
So what are the margins? I told you there's the initial margin and there is a mark to market margins. Futures are daily settled products. Daily mark to market margins happens. Yes. Whereas in forwards, it left to the parties how they want to deal with that contract. There will be margins. There will be mark to market, but they may do it daily or weekly. It left to the parties. Is it clear? Guys, you understood this flow? Yeah?
Yes, sir. Yes, sir.
Okay. Next, tell me, guys, what is mark to market margins or variation margins in futures contract? Why they are collected? Hmm? Hmm. Yeah. Guys, I'm asking you. Boss, what is mark to market margin? Why they are collected? Yeah. Guys, I'm asking you, what is mark to market margins? Yes.
Sir, it's a daily profit or loss on our futures or derivative positions. It's based on the closing price of the contract.
Why they are collected?
Yes, sir.
Why they are collected?
For risk control.
Very good. So, boss, to maintain the solvency of the contract, the losing party has to pay mark to market margins to the gaining party. Yes, that will happen in the exchange every day. Every day, the losing party has to make the payments to the exchange. Exchange means clearing house, and clearing house will make the payments to the selling the other party broker, and the broker will make payment to the other party. Yes, it gets every day. It gets settled. Yes. Okay. Okay. Next, long future, short futures, we know, yes? Okay. Next. Guys, you have 2 minutes. Just go through and ask me questions. Yes?
Sir, in the money, add the money, and out the money.
Very good.
Sir, what is OTC call option?
Very good. So options can be traded in both exchange markets and OTC markets. OTC options means these are traded in the OTC markets. Yes, it's a direct trade between two counterparties. Yes, that's called OTC options. Yes, yeah. You understood? Now options two types:
Yes, sir.
call option, put option. OTC call means this call option is traded in the OTC market. Yes. What is call option? Call option gives the buyer a right to buy the underlying asset, but no obligation.
Obligation.
OTC call option. Yes. Exchange traded call option. It also gives you right to buy the underlying asset, but you are trading where? You're trading in the exchange. Hello, boss. One option you can trade in the OTC. The same option you can also trade in the exchange. But in exchange, you
Yes.
don't see who is the other party. But in OTC, you have to know who is the other party. Yes. Okay. So now in the money call, at the money call, out of the money call. Now, guys, see here. Guys, just 1 minute. 1 minute, guys. Okay, guys, you see here. Suppose the spot price is $50, yes, and if you buy a strike $49, anything below 50, even 49.95 is also in the money call. Is it clear? Muhammad,
Yes, 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 yes.
you buy exactly at the spot, current spot is 50, you also want strike rate 50, that's called at the money call. And if
Okay.
you buy anything above 50, even 50.05 is also out of the money call. Is it clear?
Yes, sir.
In the money, at the money, out of the money call options. Is it clear? So in the money,
Yes.
your strike is less than spot price. At the money means strike is equal to spot price. Out of the money means strike is greater than the spot price. Yes, that's called
Yes, sir.
out of the money call options. Yes.
Yes.
Guys, what is long call, short call? What is long call, short call? Long call means buying call option. Yes, buying call option. When you'll buy the call option, guys?
Bullish.
When you are bullish about the underlying asset, you buy the call options. Yes. When you're bullish about the underlying asset, you buy the call options. Yes, that's called long call. So what is the payoff? Payoff is you pay premium. That's the maximum loss is premium loss, and you may get unlimited profits. Yes, that's a payoff structure in long call. Yes. What is short call? Short call means
Selling.
selling the call option. When you will do the selling of call option?
Bearish.
Bearish
When
on the underlying
market
asset.
to come down.
But what is the payoff structure here? Your gain is maximum premium, but you may have unlimited losses. Yes? Is it clear? Guys,
Yes.
short call is very risky. Why? Because you may have unlimited
Unlimited
losses.
loss.
Long call means you are buying call option. Short call means you are selling call option. Yes? Is it clear, guys? Okay.
Yes, sir.
Next, what is in the money put, at the money put, out of the money put? You have to think exactly reverse. Yes, current spot is 50. If you buy $49 strike, it's called out of the money put. If you buy exactly 50, it's at the money put. If you buy more than 51, it is in the money put. Yes. Hello, guys. You understood
Sir,
this?
once more.
So in case of put options, if you buy the put option at the strike of below the spot price, it is out of the money put. If you buy above the strike price, it is in the money put. Yes, because you want to have a right to sell at a higher strike. Market price is 50, you want to have a right to sell at 60. There is already money, $10 money, so that's in the money. Yes.
Yes.
Yeah. Suppose you want to sell, right to sell at 40. Market price is 50. When you will make money? When the market price falls from 50 to 45, 45 to 40, below 40, then only you'll make money. It's out of the money put option. Is it clear? Hello?
Yes.
So in the money, at the money, out of the money. Yes. What is long put, short put, guys? What is long put, short put?
Long put is buying the put option.
Short put?
Long put is when we are expecting market to come down, and short put is when we are expecting market to go up. In one we buy the premium, in one we receive the premium.
Very good. So long put means buying put option. When you will buy put option, when you expect the prices to fall. When you are bearish view, then you buy the put option. When you buy put option, what do you pay? You pay premium. Yes, you pay premium. Is it clear, guys? And what is your maximum loss? Premium loss. But you can have unlimited profits because the asset price can fall to zero also. Yes, there's a lot of money can be made in the put option. Yes, as a part of it. So you need to understand that. Yes, long put. Short put means selling put option. selling put option. When you will sell the put option? When you are bullish about the underlying asset, yes. When you are bullish about the underlying asset. And what you earn here? Premium. But you can have unlimited losses. Is it clear? Guys? Long put, short put, yes. Long put, short put. Yeah? You understood?
Yes, sir.
What is difference between European, American, and Bermudian style of options? Hello? Guys? What is different between American, European, and Bermudian style of options?
Sir, in European style, we can exercise only on expiry date, but on American style, we can exercise from the trade date to expiry date. Yes, sir.
Very good. So European style means you can exercise only on expiry date. American style means you can exercise any day from the date of entry contract till expiry date, including expiry date. Bermudian style means you can exercise only on specified dates. That's called Bermudian style of option. Yes? Is it clear, guys? Hello?
Yes, sir.
Okay. Can somebody tell me, guys, what is swaps? What are swaps?
Sir, swap is an OTC derivative where two-party exchange series of cash flow.
Okay. So, yes, Mohammed.
Sir, agreement between two parties to exchange cash flows in the future.
Okay.
And so they are privately negotiated, but not traded on exchange.
Very good. Swaps are nothing but a series of exchange of cash flows between two counterparties on two different underlying assets on multiple agreed settlement dates. That's called swaps. Yes. What are types of swaps we have, guys?
We
What are
have
types of
interest rate
swaps?
swap, equity swap, and
Currency
we have a commodity swap,
Commodity swap, credit default swap.
cross currency swap.
Very good. So these are the 5 different types of swaps: equity, commodity, currency, credit default swap, and interest rate swaps. Yes, these are the swaps that we have in the swaps markets. Yes. Can someone tell me, guys, what is equity swap? Yes. What is equity swap?
So one counterparty will pay the equity return, and the other will pay the fixed return.
So one party pays equity return, the other party pays fixed returns.
Fixed
Yes, fixed
return.
interest returns or floating interest returns. Now this equity swap could be only price return swap or total return swap. What is different between price return swap and total return swap?
In price return swap, only price appreciation is exchanged, and in total return swap, receiver get total return, that is dividend plus price change of equity.
So it's not only price appreciation, even price depreciation also. Yes, is it clear? Yeah. So price appreciation and price depreciation. That's the only price changes. So that's called equity price return swap. Total return swap means it includes all the returns from the equity. What are the all returns from the equity? Price changes and what do you get?
Dividend.
Dividends. Yes, that's called price return, total return swap. Yes. Okay. Guys, next, what is commodity swap? Hello?
Changing market price of a commodity with a fixed price.
So one party pays commodity returns, the other party pays fixed interest return or floating interest return. Yes. Boss, remove equity and put only commodity. Yes, commodity could be crude oil, could be natural gas, could be coal, could be agri commodities. Yes, is it clear? Guys, it's a
Yes.
swap, exchange of cash flows. One party pays commodity return cash flows, the other party pays fixed return or interest return cash flows. Yes. Okay. Then you have what is cross currency swap? What is interest rate swap, guys? What is interest rate swap? Hello? Guys, what is interest rate swaps?
Here, one party pay the fixed interest rate and other party pay the floating interest rate.
So it's an exchange of cash flows based on two different interest rates. One party pays floating rate, the other party pays fixed rates. Yes, it's a interest rate swaps. The floating rates could be like, what could be floating rate, guys? Like LIBOR, MIBOR, PIBOR,
Euribor.
SOFR, yes, Euribor. There are many observable rates which is agreed in the contract that will be exchanged between the counterparties. Yes, that's called interest rate swap. Guys, what is cross currency swap? What is cross currency swap? Hello?
Swap of one currency's payment for another currency's payment.
Boss, cross currency swap is a swap where they exchange currencies and they exchange interest on those currencies and they finally re-exchange the currencies. Yes, that's called cross currency swaps. Is it clear? Boss, in cross currency swap, there is an exchange of currency and there's an exchange of interest on those currencies and there's a re-exchange of the currencies. That's called cross currency swap. Is it clear?
Yes, sir.
What is credit default swap, guys? What is credit default swaps? What is credit default swap?
To protect against company's default. Works like insurance.
Yeah.
Where one party pay premium to other party for protection against any default, and the receiver party of the premium will protect the payer in case of any default.
So credit default swap is a OTC derivative contract wherein one party pays premium to another party for getting protection against default by reference entity and reference obligation. Reference entity's obligation is. So it's a protection from default. Yes, that's a credit default swap. So there's a premium payment by the credit protection buyer to the credit protection seller. It's like insurance against default. Yes, by the reference entity. So one party protects the other party. Yes. So it's a product where you can transfer the credit risk without actually transferring the asset. Like buying a bike insurance. Without selling the bike or without transferring the bike, you're only transferring the risk associated with the bike. What risk? Theft risk, accident risk, all that. Yes. That's called vehicle insurance. Now you're buying a insurance against default by the reference entity, reference obligation. So you're getting the default protection. Yes. That's called credit default swap. Yes. Is it clear? Guys, you understood this flow? Hello?
Yes,
Yes,
sir.
sir.
So you need to know this. Yes. This is what the credit default swap is. Yes. The callable bond, puttable bond. I hope all of you are understanding. Yes. What is callable bond, guys? Under what circumstances the bonds will be called back?
Issuer has the right to call back the bond, sir, when the prices are high.
Hello, boss. Not the prices are high. Vamshi.
Yes,
Yes.
sir.
When the interest rate falls down,
In the economic falls and
then the bonds will be.
and
So
the
the
issuer
issuer.
has the chance to issue the fresh bond at the lower rate.
So callable bond is whose right? Whose right to call back the bond?
Issuer price.
Issuer's
Issuer
rights.
rights.
They're right, but they may exercise or they may not exercise. That's their choice. When they generally call back, when the interest rates falls in the economy, then they have a chance to raise new money at a cheaper rate. So they will call back these bonds and pay back the bond holders because they can raise money at a cheaper rate. Yes, is it clear? Yeah. And if they have a lot of cash, if they don't know what to do with that cash, then also they will call back the bonds, yes, as a part of using their cash balance. What is puttable bond? What is puttable bond, guys? Hello. What is puttable bonds?
In which the holder have the right to sell the bond at like whenever they want.
The holder right, yes. The investors right, yes. Investors have a right to surrender the bond or sell back the bond to the company and take back their cash. Under what circumstances the investors will use this feature?
When the interest rate are higher.
When the interest rates are higher in the market, then they will surrender the bond and take back their cash so that they can invest in the new bonds at a higher rate of interest. Yes, that's what they use it as. Okay. Guys, can someone explain me what is securitization? Yes. What is securitization?
Turning loans into tradable products.
Very good. First, anyone else? What is securitization?
Sir, it's a process of converting illiquid asset into tradable security, sir.
So, securitization is the process of converting illiquid assets like loan receivables, home loan receivables, mortgage loan receivables, credit card receivables, or business loan receivables, or auto loan receivables, yes, into interest-bearing tradable securities by setting up SPV and all that, transferring all these loans to SPV, and SPV will issue the bonds, yes. Yeah, can someone tell me, guys, what is mortgage-backed securities and asset-backed securities, how they are different? Hello? Yeah.
So a product made by combining many home loans and then selling them to investors is a mortgage-backed security. And in asset-backed securities, it is made by combining different types of loans other than home loans, like car loans, credit card bills, or personal loans, and selling them to investors.
Very good. So, guys, MBS, ABS, what is the difference? Both are same. Only thing is the underlying pool of loans are different. In case of MBS, the pool of loans is mortgage loans, hence they are called mortgage-backed securities. In ABS, other than mortgage loans like credit card loans, auto loans, or personal loans, or education loans, or business loans, they all may be combined. And when they are issued instruments out of that pool of loan is called ABS. Actually, both are same. Only thing is the difference is the underlying pool of loans. Yes. Can someone tell me what is CMOs, guys? What is CMOs?
It's an advanced version of MBS, sir. Their loan book will be divided into different tranches, sir.
The securities will be issued from the same loan book. The securities will be issued different varieties. Some are having higher ranking, some are having lower ranking, carrying different risks, different returns. It's the same. It's called tranches of securities. Yes. So the tranches could be super senior tranche, senior tranche, mezzanine tranche, junior tranche, and equity tranche. Yes, that's called tranches. That's called CMOs from the mortgage pool of loans. Yes. Is it clear, guys? Hello?
Yes, sir.
Yes, sir.
That's called mortgage pool of loans. Yes, as a part of it. Yes. So CMO. CDO is extension of ABS, multiple tranches. That's the difference. Yes. Guys, you understood this flow? Hello?
Yes, sir.
Pause. All of you are clear?
Yes, sir.
Yes. So you need to understand this. Yes. Okay. Boss, you need to add FX also for this. Yes. Hello? FX spot, FX value term, FX value term, FX cash, FX forward, FX NDF. Yes, is it clear? Because these also products which you need to prepare. Yes. Hello.
Yes, sir.
Guys, understood this flow? Yeah. So you need to prepare thoroughly on this. Yes. Okay. So what is FX NDF contract, guys? What is FX NDF contract? First, I'm asking you, what is the full form of NDF? Yes, what is the full form of NDF? Guys, I think you are all not serious about your own learning. Yes, I don't see you guys preparing thoroughly and all that. Yes, I'm telling you, all this will go into drain if you don't prepare thoroughly. Yes, I'm asking you. Yes.
It's a non-deliverable forward.
What is non-deliverable forward contract?
So it's a cash-settled currency derivative used to hedge or speculate on currencies.
It's a cash settlement forward contract where one of the currency is non-deliverable currency and the contract will be settled in cash settlement in deliverable currency. That's called non-deliverable forward contract. It's a typical forward contract in the currency market. At least one currency is a non-deliverable currency, and the settlement will happen in a deliverable currency, cash settlement. Yes, is it clear?
Yes, sir.
What is FX cash? What is FX cash trade? It is same day settlement. Yes, it is same day settlement. Yes, that's called FX cash. Yeah. What is FX value term?
T plus 1, sir, settlement.
T plus 1 day settlement. Yes. What is FX spot? T plus
After T plus 2.
2 days. Yes. T plus 2 days. That's the difference between these products. Yes. Forward means it will settle at a future date. Yes. Is it clear, guys? Hello?
Yes, sir.
Yes, sir.
Yes.
Yes, sir.
Any questions, guys? Any questions?
Sir, pegged exchange rate system. Pegged exchange rate system.
Fixed exchange rate system. Yes. Fixed peg. Fixed peg. Fixed peg means fixed exchange rate system. Yes. Where the currencies are currency rates are decided by the central bank. The government will decide all the exchange rates. It's called fixed peg exchange rate system. What is crawling peg? Crawling peg exchange rate system. That means the rate is decided by the government or central bank, but the rate is allowed to fluctuate between two ends. It's called crawling peg. What is managed float? Managed floating rate system or dirty floating rate system. Yes. What is this managed floating rate system?
There is no control in that system.
This is a system which is it's a look like a floating rate system, but it is managed by the central bank. Yes, central bank will be intervening in the markets like RBI. In India is a managed floating rate system. Free floating rate system. What is free floating rate? Yes.
Keeps on changing, sir.
It's a pure play market rate system. Yes, that means the entire rates are determined by the market players. Yes, is it clear, guys? Market forces. Yeah. Okay. Any questions, guys? Any questions? Hello? Was all of you are clear? Yeah? Okay. So I hope all of you prepare thoroughly and ready for the mock interview. Yes. Please note, guys, the mock will be purely based on your performance. Yes. If you don't perform, then it becomes challenging for you. Yes. I told you reading definition is not allowed. You should know the concept thoroughly with example, case studies. Then only it's a process of learning. Yes. Reading definition is not going to help you. Yes. Please note that. Okay. Okay. So let me take your attendance, guys. There are 114 batches.
Yes, sir.
So, guys, you want 1 week preparation or you want to take the mock next week?
Sir, 1 week preparation.
So 1 week
1 week
preparation.
preparation.
It's not going to be 1 week, it is going to be 15 days. Please note that. Yes. And after 15 days preparation, also, if you are not preparing thoroughly, then it talks about your performance. Yes. Okay. Arya Sharma. Absent. Okay. Ashna. Aishwarya is absent. Alvin. Absent. Aman Singh.
Present, sir.
Anas Khan.
Yes,
Present.
sir.
Anish Sharma. Absent. Ankit.
Present, sir.
Ankit present. Yes. Silently spectator. Yes. Silent spectator. Well, Ankit, please be clear about your career. Yes. If you really want to participate, if you really want to get into this industry, you need to be participating. Yes, actively.
Sure, sir.
Babit, absent. Okay. Bhagyashri is not there. Pawan Kumar.
Yes, sir.
Yeah, silently there. Yes. You are not at all actively participating. Yes. You're not. I even asked one question. Please note that, Pawan, it will affect you. Yes. Please note, you need to be proactive. Okay.
Yes. Okay.
Dharani, absent. Okay. Dristi, present.
Present, sir.
Okay. Ganga Prasad, absent. Okay. Ishan Sethi, absent. Ishwari, absent. Shravan, absent. Sunita.
Present, sir.
Okay. Jayan.
Sir, Sunita present.
Yeah, I gave. Jayan, absent. Jinsi Sharun. Okay. Joel, absent. Jolene D'Souza. Absent. Okay. Kavita.
Present, sir.
Yeah, silently there, yes. You will open up only when there is attendance. Otherwise, no participation, yes. It will create problem for you later on, Kavita, if you're not participating and all that, yes. Kishore, absent. Komal, present.
Present, sir.
Okay. Mahak, present. Mahak, hello, Mahak. Okay. Mahendran.
Sir, present, sir.
Yeah, very much, yes. Mahendran, you have 92% attendance. Or you don't participate, yes? You don't even ask me one question also. Mahima Chaudhary. Manikantan.
Yes, sir.
Sir, Mahima Chaudhary present.
Mahima Chaudhary is present.
Yes, sir.
You know, Mahima Chaudhary, yeah, only 50% attendance. Please note that. Yes.
Yes, sir.
Please note that. Make sure that you have 80%. Next all sessions you should attend. Yes.
Yes, sir.
Manikantan.
Yes, sir.
Present. Okay. Mithu Kumar absent. Monica absent. Monisha.
Present, sir.
ठीक है. Nazir Sheikh.
Present, sir.
After a long time, Nazir, see, I'm telling you, this will affect you. Your attendance is very poor, 25%.
Yes,
This
sir. I
25%
did
will not help you,
12
yes? Please note that.
Yeah. Yes, sir.
Okay.
Thank you.
Pratik, Sutarve, Pratik, absent. Priyanka Jaykumar,
Present, sir.
okay. Rishna is absent. Ritesh Raj,
Sir, Ritesh is there. His mic is not working, sir. He
okay.
posted in the chat box.
Rohit Pujari, absent. Santosh Pujari,
Present, sir.
Okay. Sarfaraz Khan, absent. Sri Sonwane, absent. Okay. Soumik Sarkar,
Present, sir.
present. Suresh Krishna, absent. Vamshi,
Yes, sir.
present.
Sir, and I want to know my attendance percentage, sir, because some.
100% you have.
Okay, so
Good.
thank you.
Yes. Vinayak Ranwane,
Present, sir.
yeah, silently there. Yes, Vinayak, you don't have any questions also. You are also having 100% attendance. Yes, very good. But what is the use if you are not actively participating? Please note, Vinayak, if you don't participate, it will affect you later on. Yes, in your actual time of interview. Yeah.
Yes.
Okay. Fine, guys. So we'll catch up in the next session, in the mock session. Yes. Please note, your mocks will be, you need to attend your mocks only on laptop, not on the mobile. I don't want any one of you to attend in the mobile. If you attend in the mobile, I'll not take your mocks. And you need to neatly dress and you need to prepare thoroughly. Yes. Otherwise, it will affect you. Yes. And please note, don't take much stress about the mocks. Prepare thoroughly, give your best. Whether you clear the mocks or not, don't worry, because this mocks carries only 10% weightage. So, but you need to give the best. Please note, don't spoil your chances. Give your best. Let's look at it. Don't take too much stress. I'm telling you. But if you prepare thoroughly, you'll not have any stress. Is it clear? Hello?
Yes, sir.
Okay, guys. All
Yes,
the best.
sir.
So mock will be on next week, na?
Yeah, that you need to request to Giri. Yes. Is it clear? Giri will decide. Okay?
Okay, sir.
Okay. Yeah. Right. Right, guys. All the best. Prepare thoroughly.
Thank you, sir.
Thank you, sir.
Okay.